Yes, students. Now we will start with the new chapter, that is chapter 8, which talks about input tax credit. Section 16 to 21 of CGST Act. Section 16 to 21 of CGST Act talks about input tax credit, guys. Please come to the notebook where you have written the section numbers now. Come to that first page in your notebook. We have written till section 15. We have written till section 15 of CGST Act. We'll continue from there. Till 15 we have written. Next you write 16 to 21. I'm not making you to write individually, guys. I will give the full chapter sections. Section 16 to 21. Against that you write input tax credit. Input tax credit. In short, we call it as ITC. 16 to 21. Under the content column or title column, you write input tax credit. Yeah, see, coverage wise, whatever is covered in your syllabus, everything we will do. But here I have not made you to write individual section. I have made you to write entire chapter. Okay, guys. Very important chapter because you will get one compulsory question on this, and also it will be having connection to other chapters, guys. So please be very attentive. And also, before I start reading what is given in the provision book, I will explain you the concept through some charts or examples. First, let us understand and then get back to the provision book, guys. Yeah, please pay attention. Now, assume I am the supplier, you are the recipient. Now, as a supplier, will I take any inward supply, guys? Yes, I would have taken inward supply. Assume I have taken the inward supply on which I have paid a GST of 1000 rupees. What do we call the tax, guys? Input tax. And whatever I have purchased, what do we call it as? Inward supply. I have already explained all this. Still, again, repetition, but now we will go more detail, guys. So my purchases is called inward supply. On purchases, what is the value of supply, guys? 10,000. On that, let us take GST at 10%. So GST at 10% comes to 1000. So my supplier has collected how much from me? I was the recipient for purchases. My supplier has collected how much from me? 11,000. And he will deposit 1,000 with the government? Yes. What is that called for me? Input tax. Okay. I received the goods. Now I will do something for it, in the sense I will convert my raw material into output and I am selling it. So my sales is called as what, guys? Outward supply. Okay, let me take this side. I took inward supply of raw material, did some manufacturing, and I am selling it. So my outward supply, which is nothing but sales, assume the value of supply for that is 50,000. On that also GST, let me take it as 10%, simple rate. 10%, which comes to 5,000. 50,000 into 10%, 5,000. So totally, how much should I collect from my recipient people? 55,000. How much will I collect from my recipient? You are my recipient. How much will I collect from you? 55,000. Okay, sir. So this is called output tax for me. For my outward supply, what I am liable to pay is called output tax. On my inward supply, this is inward supply, this is outward. Okay, this is outward. I repeat, this is my inward supply and this is my outward supply. On my inward supply, how much tax I paid? 1,000, which is called input tax. And on my outward supply, how much tax I am liable to pay? 5,000. How much I collected from you? 5,000. But should I deposit entire 5,000 to the government? No, sir. Why? I will show it on the top. On the top, you observe now. Output tax which I collected from you is 5,000. But I have already paid 1,000 rupees on my inward supply. What do I do with that? I will claim a credit of it. That is what we are learning now. Okay, I will claim a credit of it. When I can claim the credit of my input tax, we call it as input tax credit, guys. Okay. So remaining, how much should I deposit to the government now? 4,000. Remaining, how much should I deposit to the government? 4,000, guys. Is that clear? Yes, sir. Now coming to the recipient. You are the recipient. How much tax you paid on your purchases? 5,000. Can you claim the credit of it? Yes, provided you satisfy all the conditions given under ITC chapter, guys. Is that clear? Yes, sir. Fine. Now, Guys, whenever I get registered under GST, there will be three ledgers or registers appearing on my GST profile. On GST portal, my profile would be created once I obtain the registration under GST. On my profile, there will be three ledgers. What are those three ledgers or registers, sir? Liability, GST liability or electronic liability register, we call it as credit ledger and cash ledger. Liability ledger will tell or register will tell how much I am liable to pay totally. How much I am liable to pay totally. What is my liability, guys? 5,000. Now input tax credit, whatever is appearing for me, where it will appear in credit ledger. So 1,000 once I pay this to my recipient, to my supplier, he will deposit it to the government. No, automatically it will appear as credit to me. Where it will appear as credit to me? So electronic credit ledger. And after adjusting liability with credit, whatever is remaining, I have to pay through cash ledger. Sir, what is cash ledger? Literally, will you pay cash? No. Guys, cash ledger is like my bank account. I would have deposited the money with the GST department and that balance will be reflecting where? In the cash ledger. I can use that balance to pay anything under GST. It is as if I am maintaining a bank account with the GST department. I should keep the deposit with them, and whenever I am liable to pay anything under GST, I need to use that. I need to use that, guys. Is that clear? Yes, sir. Fine. Okay. So this is about the basics. Now claiming this, is it so easy, sir? No. This is subject to lot of conditions and restrictions, guys. Is that clear? I just explained you the procedure here. Now to claim this, what and all this guy should do, sir? Guys, for purchases, this person is called as what? Recipient. Whereas when he do outward supply, what is he called as? Supplier. Now, obviously, he will play both the roles. He will play both the roles. For my inward supply, I am called recipient. And for my outward supply, I am called as what? Supplier. Now, whatever purchases I make, on that, what tax I have paid, input tax, can I claim the credit of it? Yes, provided I am also engaged in outward supply. Sir, what if I'm a consumer or customer? I purchased some goods and I used it for my personal consumption. Can I claim the credit? No. Credit is not given for it. Clear? Huh? Only when the goods or services are further supplied, they will give you the credit. They will receive the credit. Is that clear? So, for example, you or your parents have purchased any goods or taken any services on which GST was payable. You guys would have paid it. But can you claim the credit? No, sir. Why? Because you are not using that goods or services for business purpose. Okay, fine, guys. Now let me, IP stands for invoice price. Invoice price means including of GST, guys. Okay, now let me get into the credit. Sir, is credit available freely? No, subject to conditions and restriction, guys. Star mark is there. For the 1,000 which I explained here, there is a star. What is that star? We will see now. Oh, now assume a person is registered under GST, the supplier is supplying the goods or services along with invoice to whom? To the recipient. Okay. And he collected GST on the supply. He supplied the goods or services on which GST is applicable and he also gave the invoice to the recipient and he collected the GST. For example, assume the value of supply is 1 lakh. 1 lakh plus GST. Okay, let me just take it here. 1 lakh plus GST, 18,000 people. So totally how much he collected? 1 lakh 18,000. This is GST. He collected totally 1 lakh 18,000. 1 lakh is supplier's revenue, no doubt in that. What about 18,000? You need to remit it to the government within the due date, guys. Within the due date. What is the due date and all? We will understand later. Don't worry, as on today. Clear? So within the due date, the supplier has to remit it to the department or the government. Okay, sir. And will the supplier's responsibility end there? No. He should also file his return in GSTR 1, giving the details of his sales. Sales here means, guys, I am using the word here so that you guys will get used to. But in your answers and all, please use the word always outward supply, inward supply. Clear? What is inward supply, people? Purchases. What is outward supply? Sales. Clear? Yes. Now the supplier should file his returns GSTR 1, giving the details of what? Outward supply. Means during the month, what all outward supply he has made. It will not be only one sale, correct? You would have done number of sales. All the details he has to give in what? GSTR 1. GSTR 1, guys. Okay, sir. He will give it to the government. Through what? What is GSTR 1? Returns. R stands for returns, guys. Okay. He will file it automatically. Guys, listen. Once the supplier deposit the tax with the government and file the returns in his GSTR1, giving the details telling, I have supplied to so and so recipient goods worth 1 lakh and the GST on that is 18,000. If this guy is registered under GST, you will have one unique number called GST-IN. What is it? GST identification number. So supplier would have collected from the recipient that GST-IN and he will mention that in the GSTR1 telling whatever 18,000 I have deposited, no, that was the money collected by this GST-IN. Okay, your name is important, huh? No, the recipient name is not important. What is important is GST-IN. We had PAN, no, for income tax purpose, same way. Actually, GST-IN also is linked to PAN only. Linked to PAN only. We will understand in the registration chapter what is GST-IN, what it consists of and all. Okay, fine, sir. So supplier will deposit 18,000 with the government and file GSTR1. In GSTR1, he will give all the details of supply made, how much GST is collected, when it is collected, and who is that guy, what is his GST-IN, all the details will be given. Once this is filed with the government already have a data that this guy has paid 18,000. That 18,000 will auto reflect to him in his GSTR2B. It will get auto populated. It will get auto populated. Once the supplier give the details in GSTR1, guys, government already got the data. It will get auto reflected in what? GSTR2B of whom? Not supplier, of this guy. Once it appears here, can he claim the credit? Yes, he can claim the credit. Claim the credit means what? Whatever taxes 18,000 he has paid, no, he can adjust like this. He can adjust like this. Did you guys get it? Yes, sir. And it is mandatory. Sir, what if by chance, for example, supplier collected 18,000 from recipient, kept it in his pocket, sir. Kept it in his pocket. Will recipient get the credit? No. Now, if recipient has to get credit, what should supplier do? He has to deposit with the government and also file GSTR1. That is also mandatory. If you just deposit also, it's not enough. He has to give the details of that outward supply in GSTR1. If he doesn't do it, then recipient will be penalized or will be punished. Correct? Punished in the sense he will not get the credit. Now, what will recipient do in this case, guys? He will push supplier. Hey, supplier, please do. Every morning calling. Please do, please do. Clear. By doing this, what department did was they are making us to push each other. Okay, they need not call and tell everyone, hey, Vikas, please file GSTR1 anta. Department need not take extra efforts. Who will do this? The recipient will push supplier. If by chance, if supplier misses the deadlines, then the credit will not appear to the recipient. So the recipient will be, labo, first please file it. Correct. Now, obviously, 18,000 or any big amount, he has to claim the credit. He has to claim the credit means what? His liability will come down. The amount which he has to pay to the government will come down. Obviously, if it is not appearing, it is due to the default of whom? Supplier. Automatically, the recipient will start following up with whom? Supplier. Okay, fine. So that means recipient can claim the credit of 18,000. Yes, provided if all the conditions are satisfied, guys. All, not any one, no, not any two. All the conditions which I have given here in red color has to be satisfied. What are those? One by one. Recipient should be registered under GST. Sir, what if he is not registered? No credit. Why, sir? Because obviously, to claim credit, at least you should file the returns. No. To file the returns, you should be registered. Clear. Now, for example, you guys are not registered under GST. You have paid some GST on the goods you have purchased or on the classes or on any services you have taken. Can you claim credit? No. Why? Most of you are LR. Correct. Anyone registered? No. Okay. So you're not registered under GST. Hence, you cannot claim the credit. Yes, sir. ITC is reflected in form GSTR2B. I told you. As soon as the supplier give the details in GSTR1, it will auto-populate to whom? To the recipient in his GSTR2B. It is auto-populated. It is not a return to be filed. It is a statement where the credit will get auto-populated. Auto-populated, guys. We discussed above that electronic credit ledger will be there where 1,000 rupees credit will reflect. No. How will it reflect there? As per the data given by the supplier in his GSTR1. In his GSTR1. Once the supplier give the details of this to the department, automatically it will reflect in the electronic credit ledger of whom? Of the recipient, guys. Okay, sir. Next, the recipient should have received the goods or services. If he has not received the goods or services, can he claim the credit? No. You can claim only after you have received the goods or services. Sir, I have booked the goods, sir, which will come next month, sir. Can I claim the credit now, sir? No, no. Wait till you receive it. Wait till you receive it. And they have also told, if it is received in lots, for example, I purchased 50,000 kgs of raw material from you, and you are delivering it in 10,000 kgs in 5 installments, and you are issuing only one invoice for entire 50,000 kgs. When can I claim the credit? Entire credit can be claimed only when I receive the last installment, that is fifth installment. Is that clear? Yes. Next, ITC should not be restricted or blocked. In few cases, the ITC is restricted, guys, or blocked as per section 17. As per section 17, my credit should not be blocked. Only then I can claim it. Then he or she is in the possession of tax invoice. So supplier would have given the invoice, right? You would have issued the tax invoice where you would have told 1 lakh is for the goods, 18,000 is for GST. Okay, all the breakup. Actually, 18,000 also, if it is a intrastate supply, they would have told CGST 9, SGST 9, percentage, everything will be mentioned. Supplier details, recipient details, everything will be given in the tax invoice. And recipient should have a copy of it. So, copy of it means physical copy, na? Need not be. Even e-copy is okay. Even e-copy is okay, guys. Then furnish GSTR 3B to claim ITC. Means if recipient wants to claim credit, he has to file what? GSTR 3B. Means this details has to be given by him. In which returns, guys? GSTR 3B. Sir, you just now told about GSTR 1. GSTR 1 is only for outward supply. Whereas GSTR 3B is, you will tell what is your outward supply. On that, how much is the output tax? Minus what is your inward supply. On that, what is the input tax remaining? How much are you paying through cash ledger? All this complete details will be given in GSTR 3B, guys. Okay, sir. That means credit will be claimed through which returns? GSTR 3B. Every registered person, guys, in simple, let me put it like this. Every registered person has to file GSTR 1 and 3B monthly. GSTR 1 giving the details of outward supply, whereas GSTR 3B is giving the details of both outward supply as well as inward supply, output tax, input tax, finally, how much we are supposed to pay through cash ledger. Okay, sir. Next, input or input service, capital goods used for business purpose to provide taxable outward supply. Means whatever we have purchased, no, that purchased item should be used in the business to provide what? Taxable outward supply. To provide taxable outward supply. Sir, what if by chance if this is used for personal purpose? No credit, people. No credit. Or else, what if this is used to provide outward supply which is exempt? Can we claim the credit? No. If outward supply is exempt, credit is not allowed on inward supply. Even though we have paid tax on inward supply, no credit card. Is that clear? That means my outward supply has to be taxable, guys. Only then I can claim credit. Simple. On this, I am liable to pay tax, right? From that, whatever tax is already paid, we need to reduce. Sir, on my outward supply, if output tax is 0, will they allow me to claim credit? No. They told, sorry, we cannot. We cannot. Even though I have paid, even though I am using it for my business purpose, but if my outward supply is exempt, guys, no credit. No credit. Okay, so fine. And there is also one condition. Recipient can claim a credit provided he pay the consideration to the supplier within 180 days from the date of invoice, guys. Within 180 days from the date of invoice. So what are you talking about, sir? Sale consideration. For example, assume, guys, supplier sold the goods to recipient on credit basis. He has sold the goods. He has issued the invoice, but still payment is not collected. Now, assume FCM is applicable. Who is supposed to pay GST, guys? Supplier. So, liability is on whose head? Supplier's head. Now, if there is a delay in payment by the recipient, what will supplier do? He cannot wait. He has to deposit 18,000 to the government out of his own pocket. Why, sir? If he don't deposit it on time, then from the next day, after the due date, interest will start. Clear, huh? So, government will don't care about whether you sold it on credit or cash basis. Huh? Did supply take place? Yes. Assume time of supply is falling in December. That means on or before 20th January, you need to pay GST? Yes. Sir, till till 20th January, still recipient has not paid, sir. What should I do? Pay out of your own pocket. That is your headache. You are sold on credit. Supplier, you please pay out of your own pocket. Okay. Supplier Papa paid out of his own pocket. And he filed GSTR 1 also for December, giving details. Now, will credit reflect to recipient? Yes. Can he claim credit? Yes, bitty credit. Why? He has not paid the amount still to the supplier. But Papa paid out of his own pocket and filed GSTR 1. Recipient got the credit. Can he claim it? Yes, he can claim, no problem. But they are telling if recipient has not paid even after 180 days from the date of invoice, then recipient, you have claimed bitty credit. No, please reverse it. Please reverse it. Reverse it in the sense you have to pay it and pay it along with interest. From when? From the day you claim the credit, bitty credit, till the day you pay it. Bitty credit means free credit. Yes, you know, na? Chalo. Understood? And moreover, sir, listen. When this guy is not paid the consideration within 180 days, that means he has to reverse the credit? Yes. What if by chance, if he pay it later? On 250th day, he was waiting for that milestone date. On 250th day, he paid. Can he get back the credit? Yes. He can get back the credit, guys. Okay. And please be careful. This 180 days is not for the payment for department. This is by whom to whom? Recipient to supplier. About what? Consideration. Clear? Yes. You might ask me. That is why I just gave an example. Sir, without even paying, how will he claim the credit? Supplier would have deposited Papa out of his own pocket. No. In that case, will recipient get a credit? Yes. Because anyway, government got the money. They will give the credit. Okay. But was it paid from the pocket of the recipient? No. So if recipient doesn't pay it within 180 days, guys, then credit has to be reversed. Credit has to be reversed. Got it? Huh? Yes. So story by story we are building. Sir, here you spoke about GSTR 1, GSTR 3B, GSTR 2B and all. Little more clarity about it. Guys, we will be learning all this in details in returns chapter. But still, I just want to give more clarity so that you will understand this topic. Yeah. Listen. A registered person under GST, any registered person has to file the following two returns, guys. GSTR 2B is not a return, it is a statement. It is an auto-populated statement. Okay. Every registered person under GST has to file GSTR 1 and GSTR 3B. Every registered person means, let me mention that also. As per which section, sir? Section 9. Section 9, people. Why so? Because section 10% is not supposed to file 1 and 3B. You will file annual return. Who is section 10%? Composition supplier. Composition supplier. Yes. So whatever I am talking, and moreover, for composition supplier, is ITC available? Is ITC available? No. I cannot claim ITC if I am a composition supplier. I cannot even pass it to my customs. Clear? So for this chapter, wherever I talk about supplier, he is not a composition supplier. Why so? Because for him, anyway, credit is not at all available. So wherever we talk about the supplier, guys, it is a person who is registered under section 9, normal levy or normal scheme of. So every registered person under GST as per section 9 has to file GSTR 1 and 3B monthly. GSTR 1 has to be filed on or before 11th of next month, guys. Giving what details are? Only outward supply and output tax. Simple. Only sales. Only sales, guys. Okay, sir. What about 3B, sir? Guys, after one is filed, whatever one is filed by the supplier, it will auto reflect to the GST in GSTR 2B of whom? Recipient. Now, combining this as well as GSTR 2B, you should file what? GSTR 3B. And I repeat, guys, don't only talk about supplier. Supplier will also be a recipient. Clear? Obviously, when he is supplying something outside, he would have taken something inside also. So for his inward supply, he will be recipient. Whereas for his outward supply, he would be a supplier, guys. Okay. I repeat, please listen. Now, assume I am the registered supplier under GST under section 9. For my outward supply, whatever I have done in December month, I have to give the details in GSTR 1 on or before 11th January. Okay, sir. Now, from whom and all I have purchased, they would have also filed GSTR 1, right? Assume I have made lot of purchases in December from various people. They would have also filed GSTR1, right? For January, sorry, for December on or before 11th January. Yes. All those credit will reflect to me where? In GSTR2B. Okay. Output tax is there in GSTR1. Input tax is there in GSTR2B. Combine both of this and file one return. What is it? GSTR3B. Giving the details of what, guys? Outward supply, output tax. That is copy paste of this. Plus inward supply and input tax. Where will this appear? In GSTR2B. Take it from there. Take it from there. And this has to be filed on or before 20th of next month. That means for December, on or before 20th January, guys. Is that clear? Sir, every person should file it? Yes. And it is a monthly return. It is a monthly return, but they have brought something called as QRMP, quarterly return monthly payment. That is for the small suppliers who is under section 9, who cannot file returns monthly. They told you can file quarterly, but pay GST monthly, just to reduce their compliance burden. Just to reduce their compliance burden. So GSTR 1 and 3B can be filed by those people quarterly, but they have to pay GST monthly. But if question is silent, always go with monthly, because majority of the people will fall under monthly. Did you understand? If they are not given in the question whether GSTR 1 and 3B is filed monthly or quarterly, what do you follow? Monthly. Go with monthly. If they themselves has clearly mentioned supplier is following QRMP, quarterly returns monthly payment, where is filing GSTR 1 and 3B quarterly, then go for it. Clear? Yes. But listen, guys. Whenever supplier supply the goods or services on which GST is applicable, he will give the details of that outward supply in which returns, guys? In GSTR 1. Correct? He will give the details of his outward supply in which return? GSTR 1. But assume this guy, I'm just giving an example. This guy is following QRMP, guys. He is following QRMP. So he will file GSTR1 when? Quarterly. That means, let me take an example. For April, May, June quarter, he will file GSTR1 when? In July. He will file it in July. But some of his recipients cannot wait. Now this recipient is an urgent person. Is in a full urgent. I want to claim credit immediately. Assume this supply happened in April, guys. April. So recipient will be willing to claim the credit by May at least. Yes. But if supplier is filing the returns quarterly, then the recipient has to wait till July to claim credit. But this recipient is not ready to wait. In that case, supplier has an option to give the details using invoice furnishing facility, guys. IFF stands for invoice furnishing facility. Invoice furnishing facility. So that means this guy is filing GSTR1 quarterly, right? That is for April, May and June. He will file it in July. But for the persons who has purchased in April and May, they cannot wait till July. In that case, for any supplies made in the first 2 months of any quarter, the supplier can give the details of his outward supply, not in GSTR1. He can give it in invoice furnishing facility. Whereas for the last month of the quarter, he can give the details in GSTR1 only. Because for June month, whatever sales is made, I can give the details by July itself. Is that clear? So invoice furnishing facility is available only for those supplier who has opted for QRMP. And they can give the details of outward supplies using invoice furnishing facility only for the first 2 months of any quarter. This is just to make sure that recipient will not wait too long to claim the credit. And that too, it is an option. For example, if recipients are ready to wait, any day I can claim the credit even in July, I am fine, Anta. If recipient is telling, can supplier give the details in GSTR1 only? Yes, he can give it. So he can use invoice furnishing facility only for the recipients who wants to claim the credit immediate for the supplies made in the first 2 months of the quarter. Clear? Yes. And again, all this in detail we will learn in returns chapter, guys. GSTR 1, 3B, 2B, along with invoice furnishing facility, even this QRMP, everything I will teach you in detail in returns chapter. As of now, how much ever is required, I've just explained that. You better understand that much. Don't worry too much. If still some question mark is there, it would definitely be answered in the returns chapter, guys. Is that clear? Yes. Hope you guys got clarity. Now, see, supplier has to give the details. Please listen. Please listen to the sentences properly. Supplier has to give the details of his outward supply in what? GSTR1. Once suppliers give the details in GSTR1, it will auto reflect to the recipient in which in which statement? GSTR2B. Combining both of this. Now recipient also is a supplier. Yes. You would have filed one na? Yes. Now credit is appearing to him in GSTR 2B na? Yes. Combining both of this, he has to file one return. What is it? GSTR 3B. Where he will tell all these details. Guys, where he will disclose all these details. What is my output tax, sir, for the month? What is my ITC, sir, which is reflecting in credit ledger? And how much totally I need to pay through cash ledger, sir. All these details will be given in where, guys? GSTR. Okay, let me use this color. GSTR 3P. Got it? Yes. Listen. As soon as the supplier file GSTR 1, what is this liability, guys? 5,000. That will reflect where? In the liability register. And once I have made the purchases, supplier will give the details of his outward supply in GSTR 1. No. For me, what is it? Inward supply. How much was the credit for me? 1,000. It will reflect where? In the credit ledger. Hope you understood. Hope you understood. I repeat. For my outward supply, I will file GSTR 1. As per GSTR 1, whatever is my output tax, where it will appear, guys? Liability register. Okay, sir. Now for my inward supply, my supplier will file GSTR 1, right? For him, it was an output tax. For me, it is an input tax. And that will auto reflect to me where? In the credit ledger. Now I need to interadjust both and see what is the remaining to be paid. Remaining amount, whatever I pay, should be paid through what, guys? Cash ledger. What is electronic cash ledger? It is nothing but the bank account maintained by the registered supplier with whom? The department. It is like whenever I am supposed to pay anything under GST, I need to deposit the amount into the cash ledger and from there I need to pay it, guys. So in order to pay 4,000 GST, first there should be a balance in my cash ledger. Minimum how much? 4,000. 4,000. Only then I can make the payment, guys. Is that clear? Yes, guys. Okay, just a minute. If there is anything else, I will just check. Yeah. Let us go back, read it now. So we have understood the story, guys. Almost the provisions which are given, especially in section 16 also I have covered it. Now let us go and read it. Now you see how you will get connected. Taxes paid on inward supply of inputs, capital goods and services are called as what, guys? Input taxes. Now, whatever I have paid on my inward supply, guys, inward supply can be what of? It can be what and all? It can be input, or it can be input service, or it can be, okay, let me write it on the top better. It can be input or input service or what? Capital goods. Guys, let me name it in simple. Input means what? Raw material, which I will use it in my manufacturing process or in my entity. Input service means what? Sir, I have taken some service in order to use it in my business. Capital goods means what, guys? It is nothing but fixed assets like plant and machinery, furniture, which I have purchased to use it in my business for a longer period. For a longer period. What is the difference between input and capital goods, guys? Input is like a goods for us, purchases. You know, you would have passed purchase entry in your accounts, purchases to so and so, correct? So purchase entry will pass for fixed assets. No, for goods, inventory, correct? That is nothing but input here. Sir, what about capital goods? If you purchase any fixed asset, what is the entry will pass? Purchases. To. No, you will use the name of the asset. Plant and machinery account debit, furniture account debit, building account debit, or whichever is the asset, debit to bank. If you are paid immediately. Correct? Yes. So that is the difference between input and capital goods. Guys, let me keep it simple. The word which is used in the law is input capital goods, but it is nothing but input means raw material or goods, whereas capital goods means fixed assets, guys. Okay. So this taxes may be integrated GST, that is IGST, or CGST, that is central GST, or state GST, or union territory GST. Taxes paid under reverse charge mechanism are also called as input tax. Now, sir, listen, guys. There are two mechanisms. Actually, we discussed about it. forward charge and reverse charge. Now, assume forward charge is applicable. I have taken the inward supply. Who is liable to pay tax? My supplier. But will he charge and collect it from me? Yes. Is it my input tax? Yes. Can I claim the credit for it? Yes, because ultimately I paid out of my own pocket. That guy collected from me and deposited to the government. Now let us assume RCM is applicable. Supplier supplied the goods or services to me on which RCM is applicable. Now liability is on whose head? Recipient. I myself has to pay GST. Can I get a credit of it? Yes. Why so? Because it is on my inward supply. Guys, whether it is forward charge or reverse charge, ultimately GST is paid from whose pocket? Recipient's pocket. Can he claim the credit? Yes. Only the liability is on different head. If it is forward charge, liability is on whose head? Supplier. If it is reverse charge, the liability is on whose head? Recipient. The credit of the above taxes is called input tax credit. Means whatever tax you have paid on your inward supply is called input tax. The credit of that is called as what? Input tax credit. And it is defined in the law. Very important definition. What is it? Input tax credit. Very, very important definition. We will see that later. That is, the taxes paid on inputs are available as set off against the taxes payable on outward taxable supplies. CGST Act 2017 contains the provisions relating to ITC, its availment, utilization, and conditions, and restrictions attached therewith. Guys, first part of this chapter we will just focus on, am I eligible to claim credit? Once I get a credit, how to utilize it, we will see later in the same chapter. How to utilize the credit, we will learn later, maybe tomorrow. But how to get the credit? Am I eligible for it or not? Or is it restricted or blocked for me? We will understand it today, guys. Input tax credit is considered as cornerstone of GST, means one of the important key feature of GST. In the previous tax regime, there was non-availability of credit at various points in supply chain, leading to cascading effect of tax, that is tax on tax, and therefore increasing the cost of goods and services. Can you guys recollect the examples which I gave in first chapter? Pre-GST, pre-GST, the value of the goods, the purchase price went up to the consumer. Why, sir? Tax on tax, tax on tax, tax on tax. But when it comes to GST, sir, on purchase also GST, on sales also GST. Will they give the credit on the tax which I have paid on my inward supply? Yes. And if you observe post GST, I gave bottom output tax minus input tax. Whatever is the balance we will pay. That means at each stage, the person is paying tax on what? Is it on the entire sale value or only on the value addition? Only on the value addition. No doubt, from recipient he will collect full, but he will adjust whatever tax he has paid on inward supply, that is minus. Remaining he will pay, right? So with the last table, if you remember, I explained there, each person in the chain is paying tax only on the value addition given by them on the product. We call it as value added tax. Previously, we had something called as VAT, that was called as value added tax. But even GST is called value added tax. What is the concept behind it? Is simple. Each person in the supply chain, we are asking you to pay tax only on the value addition. Okay, let me take my example only here. Okay, here supplier purchased the goods for 10,000, is selling for 50,000. What is the value addition given by them? 40,000. On 40,000, 10% comes to how much, people? 4,000. Ultimately, how much he ended up paying? 4,000. On what, sir? The value addition given by him, which is 40,000. Did you understand? Same goods was purchased for 10,000. He did some activities and he is selling it for 50,000. So what is the value addition given by this guy? 40,000. On 40,000, I have taken GST rate 10% here. Comes to how much? 4,000. Did he end up paying that much only? Yes. Yes, guys. This is because of what, sir? Whatever tax is paid on purchases is allowed as credit, guys. Got it? Yes. So under GST, is cascading effect removed? Government claim that we have removed it completely, but I don't agree with their statement. I can tell they have majorly reduced it. Why, sir? Because in few cases, they don't give you credit for this, guys. Which are those we will learn? They don't give credit for this. Automatically what happens? It will lead to cascading effect. No. What will be the cost for this guy? Will it be 10,000 or 11,000? 11,000. Okay, even though you are using it for business purpose, even though conditions are satisfied, in few cases they are blocking the credit. Clearer. In that case, can we tell cascading effect is fully removed? No. Clearer. The government uses that statement, but I don't completely agree with it. But in your exam, if there is any question, what is the advantages of GST and all, you can use the same. Okay. Yes. Use the same in the sense cascading effect has been removed under GST and all. This flaw has been removed under GST and a seamless flow of credit throughout the value chain is therefore available. Consequently, doing away with what? Cascading effect of taxes, guys. Means they have told we have removed the cascading effect. To avail the benefit of input tax credit, it is required that the person availing such benefit is registered under GST. Only if recipient is registered under GST, he can claim the credit, guys. An unregistered person is not eligible to take the benefit of ITC. Section 155 of CGST Act 2017 states that where any person claims that he is eligible for input tax credit under this act, the burden of proving such claim shall lie with whom, guys? Such person. For example, if I am telling I am eligible to claim 10,000 credit, who should prove it? Who has the onus to prove it? Me. I should claim. I should claim 10,000 credit means I should prove I have satisfied all these conditions. I should prove that I have satisfied all these conditions, guys. Sir, is it necessary to go to department and prove every time? No, no. If question arises, I should be ready to prove it. Because sometimes scrutiny, sometimes investigation will be opened against the supplier. Where they will tell, because you have claimed a credit of so much, prove it. Anna. Should I be in a position to prove it? Yes. I should be in a position to prove it, guys. Section 49(5) of CGST Act 2017 provides for utilization of ITC in the electronic credit ledger for payment of GST. Guys, whatever credit I have, where it will appear to me in electronic credit ledger. And how to utilize it, we will see it in the next part of the same chapter. First, we will see, am I eligible or not? Do I get a credit or not? If yes, how much? Once I get a credit, we will see later how to utilize it. How to utilize it, guys. Okay. And whatever we are learning in this chapter, guys, these are the provisions covered in which act? CGST Act, which is mutatis mutandis, applicable even under IGST Act. Provisions of ITC under CGST Act have also been made applicable to IGST Act, while Section 20 of IGST Act. Okay. Coming to the relevant definition, all these terms we already seen it. Let me just go through the definitions. First one, capital goods. Guys, what is capital goods in general sense? What is capital goods? Fixed assets. Fixed assets, when you purchase, you will debit it to P&L account or you will capitalize. Capitalize and show it as an asset where? In the balance sheet. Correct? Yes, same meaning they are giving here. But the word what they are using is not fixed asset. They don't want to copy paste the accounts. Okay. So at least some different name let us give. They have given capital goods. Capital goods means goods, the value of which is capitalized. The key word is the value of which is capitalized in the books of accounts of the person claiming the ITC and which are used or intended to be used in the course or furtherance of business. Sir, I have purchased a vehicle for personal purpose. Can I claim a credit for it? No, no, no. Only for the assets which is purchased for business purpose, you are eligible to claim credit, guys. So 2 clause 19 defines capital goods. Next, exempt supply. Actually, exempt supply we already seen number of time. 2 clause 47. What is exempt supply? Exempt supply means supply of any goods or services or both which attracts nil rate of tax or which may be wholly exempt from tax under section 11 or 11 of CGST Act or section 6 of IGST Act and also includes non-taxable supply. So exempt supply includes totally three things, guys. What are those? Nil rated supply, wholly exempt supply, and non-taxable supply. We have in detail learned this definition already. But why is it coming here, sir? Guys, I told you, if my outward supply is exempt, can I claim the credit? No, not possible. That point will come. Again, I need to explain it when we go to section 17. There I will cover up. Input. What is input, guys? In simple, I can call it as raw material. Input means any goods other than capital goods used or intended to be used by a supplier in the course or furtherance of business as per section 2 clause 59. Next, input service. Input service means any service used or intended to be used by the supplier in the course or furtherance of business, guys. So I have taken some service which I would be using it for my business purpose. Can I claim a credit on it? Yes, guys. So inward supply includes what and all, people? Totally three things. What and all? Input, input service, and capital goods. Now, what is input tax? Input tax in relation to a registered person means the central tax, that is CGST, or state tax, that is SGST, or integrated tax, which is IGST, or union territory tax, which is UTGST, on any supply of goods or services or both made to him, but does not include the tax paid under composition levy. They are very clear. Input tax is something which we have paid on our inward supply, but that will not include the tax paid under composition scheme. Guys, they need not repeat it again here, but still they have told. Why? In section 10 itself, we learned, the person who is registered under composition scheme, there are two composition schemes. Now, on his inward supply, can he claim credit? No, he cannot. On his outward supply, can he collect tax from the recipient? No. Even if he collect it, can recipient claim the credit for it? No. Correct? Yes. We had already learned this in section 10, but they are repeating even in the definition here, telling input tax will not include the tax paid under section 10, guys. Now, input tax credit, very important definition. What is it? Input tax credit means credit of input tax. Input tax credit means credit of input tax. If they had not defined this, then I would have misunderstood. Chalo, 2 clause 63. Mark it as very important. No need, I just told. Inward supply. Inward supply in relation to a person shall mean receipt of goods or services or both, whether by purchase, acquisition, or any other means, with or without consideration. So in simple, inward supply means purchases, guys. Then one more important definition. This is actually important. Mark it. Zero rated supply. Zero rated supply. Where is it defined? So in section 16 of IGST Act. Section 16 of IGST Act. What is zero rated supply? Zero rated supply means any of the following supplies of goods or services or both, namely export of goods or services or both. Okay, export is always zero rated. And also supply of goods or services or both to a special economic zone developer or a special economic zone unit. Special economic zone unit or special economic zone developer. I have told you who is special economic zone developer, guys. In my example, it was Mantri developers. Okay, government declared an area as SEZ. Now they want someone to come and develop this area so that the corporates can come and operate here. So whoever is developing that area, we call them as SEZ developer. And whoever will come and establish their operation there, what do we call it as? SEZ unit. SEZ unit, guys. Okay. Now, guys, please be careful. This is what we learned as zero rated supply. Interstate supply is different. Zero rated supply is different. There is a difference. Please pay attention now. Please pay attention. What is zero rated supply? I've given you. Please observe. If there is any supply to zero rated, sorry, SEZ unit. If there is any supply to SEZ unit or SEZ developer, what do we call it as? Zero rated. Is it interstate supply also? Yes. But sir, what if there is supply by? Means they are supplying. They are supplying. If there is supply by SEZ unit or SEZ developer, what it is, guys? Interstate. But it is not zero rated supply. It is not zero rated supply. Guys, listen. Interesting. Now assume government has declared this area as SEZ. I told you this location is considered to be outside India. It is actually in India. But for GST, we consider it as what? Outside India. If anything going inside this is at par with export, guys. Is at par with what? Export. So do we treat it as interstate as well as zero rated? Yes. Whereas anything going out from here, it is interstate but not zero rated. Not zero rated. It can be actually import also. At par with import, but I'm not telling it exactly import because if it is taken from SEZ within India, we can call it as import. Sir, what if it is going outside India? From SEZ, it is going outside India. Then it will fall under export actually. It will fall under what? Export, guys. Export is always zero rate. I repeat. Listen here. If it is coming from here to any place in India, I can treat it at par with import. It is interstate but not zero rated. Sir, what if it is going outside India, sir? It is what, guys? Export. Is it interstate? Yes. Is it zero rated? Yes. Hope you understood. Hope you guys got it. I repeat, when we were discussing the nature of supply, that is in place of supply chapter, we learned export and supply to or supply by SEZ unit as well as SEZ developer is always interstate supply. Now what we are learning is zero rated supply. Zero rated supply means export is always zero rated plus any supply to SEZ unit or SEZ developer is a zero rated. What if it is supplied by them? I cannot tell zero rated. I cannot tell zero rated. If it is outside India, then I can tell, oh, it falls under exports, it is zero rated. Sir, what if it is by chance within India? Then it will not be zero rated, but it will be interstate. But it will be interstate. Hope you guys got it. Got it, no? Yes, sir. Now, okay, this we have seen. If my outward supply is nil rated, non-taxable or exempt supply, in simple, exempt supply, can I claim credit on my inward supply, guys? No. Even though I have paid tax, ITC is not available. Sir, what if my outward supply is zero rated? Can I claim the credit? Yes, they're telling we can claim credit. We can claim credit. In that case, output tax would be zero. Still, ITC is available. But I cannot utilize ITC. Assuming I am engaged only in export, zero output tax. What will I do with my ITC? I can claim a refund of it. I can claim a refund of it. Or else, if I am engaged both in export as well as within India, domestic sales I am doing. For domestic sales, I am liable to pay GST, right? That is my output tax. Against that, can I adjust my ITC? Yes, I can adjust. Or if I have ITC but I'm not able to use it, can I claim a refund of it? Yes, I can claim a refund of it. Hope you guys got it. I have given one table here itself. You can see difference between nil rated, exempt, zero rated and non-taxable supplies with respect to ITC. If my outward supply is zero rated, guys, can I claim the credit? Yes, credit is available. Examples of zero rated is export and supply made to SEZ unit or SEZ developer, not buy. Please be careful. By mistake, you'll write buy. Supply to, guys, remember logically. I told you for GST, SEZ is a location where? Outside India. So if it is going to them, people, where is it? If it is going to them, it is a location outside India. It is at par with what? Exports. At par with exports. Okay, so next, nil rated. Example is, guys, zero rated is different, nil rate is different. Actually, the meaning is same only. Zero, nil. But under GST, they have considered it as two separate things. What is nil rated, guys? It is supplied within India. But for few goods, they have told the rate is nil. Rate is nil. Yes. Supplies that have declared a rate of 0% GST or nil rate. Example like salt, grains, jaggery, etc. So if outward supply is nil rated, can I claim the credit on my inward supply? No, we cannot claim. Then exempt. Supplies but do not attract GST. We have seen the list of services which is exempt, no? So if my outward supply is any of the exempt services, can I claim credit on my inward supply? No, people, I cannot. Examples are goods I have given you, fresh milk, fresh fruits, curd, bread, etc. Or else we have seen the list of services like agriculture, charitable and all, which is exempt. So if any of my outward supply is exempt, then I cannot claim the credit on my inward supply, guys. Last one, non-GST or non-taxable supply, that is on which GST is not applicable. These supplies do not come under the purview of GST. Example, alcoholic liquor for human consumption or PhD man. Sir, if my outward supply is alcohol or PhD man, on my inward supply, I have paid GST. Can I claim the credit? No, you cannot. No, You cannot. Is that clear? Why, sir? Guys, simple. When outward supply is exempt, government is not getting any revenue there. So will they give the credit of the tax paid on the inward supply? No, they will not give you the credit. Is that clear? Yes, sir. So till now, whatever we have seen is just the basics, guys. Okay, but most of the concept I already covered. Whatever we will be seeing next is what is given in the law. Clear? Yes. Now quickly make a note of few things. This and all we will take care. First, you make a note of this one, guys. All these are important. I stands for input slash input service slash capital goods. That what I have written in blue color. I stands for input, IS stands for input service, CG stands for capital goods. Okay. Next, I will move to the next chart. Even this is important. Actually, silence. Whatever I have given you, no, the conditions, all these are actually mentioned in section 16, guys. Section 16. I can just write it, put a flower bracket and write section 16. And guys, in this chart, I had mentioned about QRMP and all. Don't take down that, but that will, because that will lead to confusion. I just mentioned QRMPO, and when the assessee, not assessee, supplier. When supplier is following QRMP, he will file GST or 1 quarterly, guys. More about this, we will learn in the returns chapter. You need not mention anything about QRMP. Clear? Yes. Because when supplier is following QRMP, for the first 2 months of any quarter, whatever supplies he has made, he can give the details using what? IFF. IFF stands for what? Invoice Furnishing Facility. That is open only for the first 2 months of the quarter for the supplier who is following QRMP, guys. Okay. Fine. Then coming to whatever conditions I have given you, no, guys, which has to be satisfied the recipient to claim the credit. All these are given in section 16. Our next task is to learn section 16. But before that, you guys can just make a note of even this, because this also plays a major role. Anyway, in detail about this, we will be learning it in returns chapter. But as of now, the knowledge of this is required. Just make a note of it. Next, you can take down this also. Just give a small heading, zero rated supply, and take down this part, only the top one. The below one not required. Even this blue part, whatever I have done, you can take it. That is, that SEZ is an area. If anything going to that will be interstate supply. This would be interstate supply, guys, but not zero rated. It is not zero rated. But anything going outside that, sorry, it would be anything going to SEZ will be interstate and also zero rated supply. Sir, anything which is going outside that, will it be zero rated? May not be. If it is going outside India, then I can call it as export and it would be zero rated. Sir, what if it is coming within India? Then it will be at par with import. At par with import. Yes, just make a note of it. This chart not required. I need to explain that. Later you will take it. You can just give a small heading, zero rated supply and take down. Yes, now we will get into section 16, which talks about eligibility and conditions for taking input tax credit. Guys, whatever we will be learning now is given in section 16, which I have already explained in my chart. That is this part, guys. This part. All these conditions are actually given in which section, sir? Section 16. So let us learn subsection order. Eligibility and conditions for taking input tax credit, section 16. First, subsection 1. Every registered person shall be entitled to take credit of input tax charged on any supply of goods or services or both to him. To him means outward supply or inward supply, guys? Inward supply. which are used or intended to be used in the course or furtherance of his business, and the said amount shall be credited to electronic credit ledger of such person. Guys, lot of things to break down here. First thing, they started with what? Registered person. So that means recipient has to be registered. Recipient has to be registered in order to claim the credit. Okay, sir. Then the credit is on what? On the inward supply. Made to him in the sense it is inward supply. And whatever inward supply is taking, either of input or input service or capital goods, should be used or intended to be used. Intended to be used means what? I have not used immediately. For example, I have purchased capital goods now. I will start using it in the next month. Can I claim the credit now itself? Yes. If I have an intention to use it in the business, I can claim the credit, guys. Okay. Of his business. So it should be used for business, guys. Used or intended to be used for business purpose. And the said amount, whatever credit is available, it will be credited or it will be shown where people? Electronic credit ledger. I already spoke about it. About this three ledger, we need to learn in detail. We will be talking about in the payment chapter. That is electronic credit ledger, electronic cash ledger, and liability register. Clear? Yes. Whatever is required as on today, I have given the explanation for that, guys. Fine, sir. This is all about subsection 1. Then coming to subsection 2. What is it telling? Lot of things are there under subsection 2, guys. Lot of conditions are there. You can see there are various clauses A, AA, B, BB, BA, C, D. Sir, should all these conditions has to be satisfied? Yes, guys. So even here I have given no. All these conditions has to be satisfied, people. Even if one is missing, recipient cannot claim credit. Recipient cannot claim credit. So what are those conditions, sir? Let us see one by one. No registered person shall be entitled to the credit of any input tax in respect of any supply of goods or services or both to him unless means a registered person cannot claim the credit unless he satisfy all the following conditions, guys. So what are those conditions? Clause A. He is in the possession of tax invoice or debit note issued by a supplier registered under this act or such other tax paying document as may be prescribed. Yes, in simple, the recipient should be having a copy of the tax invoice or any other document issued by whom? Supplier. Sir, should it be a physical copy only? No. Even if it is a e-copy, that's fine, guys. Most of them will maintain e-copy only. Physical copy also you can maintain, but if there are too many purchases, how will you maintain? Clear? So both is fine. Physical copy as well as e-copy, both are fine. But most of the large scale entities will maintain it in e-form. Okay. Sir, what is the debit note? Guys, we discussed about credit note. When does the supplier give credit note to the recipient? Whenever there is a discount given. Or even if there is any sales returns and all, credit note will be issued. So what about debit note? Guys, debit note is when less amount is charged in the invoice. For example, invoice is already issued for 1 lakh rupees. But again, the supplier is charging extra 5,000 to the recipient. Now, will he call back the invoice, change the figure now? No, no. For the additional amount, he will issue a document called debit note. So, if any additional amount has to be charged by the supplier to the recipient, he will charge it by way of which document, people? Debit note. Clear? If he is giving any discount, then credit note. Opposite effect, guys. Please be careful. And we have a separate chapter for all these documents, invoice, debit note, credit note and all. We will learn there more about it. Okay. So whatever is the document issued by the supplier, the recipient should have one copy of it. Okay, sir. Next, AA. The details of invoice or debit note in respect of said supply has been furnished by the supplier in the statement of outward supply. In the statement of outward supply is nothing but GSTR 1, guys. Or as amended in form GSTR 1A. Guys, GSTR 1A is recently introduced. If there is any mistake in GSTR 1 filed by the supplier, he can amend it or he can correct it through what? GSTR 1A. GSTR 1A is not a separate return. Whatever mistake is done in 1 can be corrected through what, guys? 1A. Clear? Yes. If any, or invoice furnishing facility. When is invoice furnishing facility also I have told. That is when supplier is following QRMP, guys. And such details have been communicated to the recipient in the manner specified under section 37. Guys, simple. What are they trying to tell you here is, I told you, whatever supply has been made by supplier to recipient. He has also given the invoice. No, this details has to be given by the supplier in what? GSTR 1 or using invoice furnishing facility. This provision is given in section 37. And whatever is given by the supplier in GSTR 1 or using invoice furnishing facility, it will auto populate to the recipient in GSTR 2B. Actually, this is given in section 38, which we have not yet covered, because this and all will come in returns chapter. I have not yet covered it, but I'm just mentioning so that you will have an idea about it. As of now, don't focus more on this sections 37, 38 and all. Clear? So they have told in section 37, supplier, whatever outward supply you have made, you have to give the details of that in your GSTR 1 along with the invoice wise details. Invoice details means whatever invoice you have given to the recipient who is registered, no, give the details of it. Invoice is for how much? What is the GST amount? When did you collect? When did you deposit to the government? All the details has to be given along with GST IN of recipient, so that the credit can be passed on to the recipient, guys. Is that clear? Yes, sir. Note, ITC can now be taken only for those invoices or debit notes whose details are reflected in form GSTR 2B. Only when the respective suppliers, vendors have filed the details of such invoices in form GSTR 1 or as amended in form GSTR 1A, if any, are using invoice furnishing facility. So whatever details is given by the supplier in his GSTR 1 or 1A, if any mistakes are there, or invoice furnishing facility, if it appears to the recipient, only he can claim the credit. Okay. AA done, guys. AA, actually this was added later. That is why they have given AA and all. When the act was introduced, A, B and all was there. In between, if they add anything, then they will give a different alphabet. What is that? AA, AB, BA, like that and all. Yeah, they have to make it fit in, no? In between that, that is why. B, he has received the goods or services or both. Who? Recipient. Recipient should have received the goods, guys. Or if he has received the services, that's fine. And sir, for receipt of services, can I prove? No, because it is intangible. But it should be enough to tell that supplier has given the services and I have received it. Yes, sir. The registered person need not receive the goods or services himself. It is sufficient even if the goods or services are delivered to some other person on his direction, that is bill to ship to. Bill to ship to. We had one example. Do you remember it? Bill to ship to. Now A ordered the goods to B to deliver it to C. Actually, goods are delivered to whom? C. So can I tell recipient is C? Yes. But who is deemed to be the recipient? A. Because he is the one who ordered it. So what will B do? B will send the invoice to A, whereas send the goods to whom? C. So we call it as bill to A, whereas ship the goods to whom? C. Okay, sir. But for GST purpose, whom do we consider as deemed recipient? A. And even when we were discussing about the place of supply, we learned what is the principal, what is the place of supply? The principal place of business of whom? Deemed recipient. This will be considered as place of supply as per section 10(1)(b). Is that clear? Now coming to credit part. Sir, this and all we already learned. Now why are you explaining? Guys, now goods are delivered by B to C. But who is actually deemed recipient? A. Now, can A claim the credit or C? A. But goods are not received by A, no sir. Still, it is deemed that he has received. It is deemed that he has received it. Okay, sir. Even though physically goods are received by C, still it is deemed that A has received it. Is that clear? Yes, sir. Chalo. One example I have given you. A is a trader who places an order on B for a consignment of soda ash. A receives the buying order from C for the same quantity of soda ash. A instructs B to deliver the goods to C. Though the goods are not physically received by A, section 16(2)(b) allows ITC of such goods to Mr. A. To Mr. A. Yes, sir. Fine. So in this example, even though goods are received by C, A can claim the credit of it. And there is one more separate supply between whom? A to C. And in that case, who is the recipient? C. Can C claim a credit for it? Yes, he has actually received the goods. No problem there. No problem there. So in simple guys, in case of bill to ship to transaction, even though the deemed recipient has not physically received the goods, still it is deemed that he has received the goods and he can claim the credit. Okay. Then there is one proviso here. This proviso, let me read it. Provided that where the goods against an invoice are received in lots or on installments, the registered person shall be entitled to take full credit upon receipt of last lot or installment, guys. So if the goods are received in lot or in installment, the recipient can claim full credit when last lot is received. For example, assume I placed an order with you to supply 10,000 kgs 5 times. How much totally? 50,000. So every month, assume for 5 months, you will be sending me 10,000 kgs. And you are giving me one invoice for full 50,000 kgs. One invoice for full 50,000 kgs. When I received first installment, second installment, third installment, fourth installment, can I claim the credit? No. Only when I receive the last installment, I can claim full credit. Full credit in the sense for full 50,000. Sir, when first installment is received or first lot is received, can we claim credit proportionately only for 10,000 kgs? No. They're telling, sorry, you cannot. Now, if at all, if I want to claim, I can plan in a different way. I can ask you to give 5 different invoices. That is, for each 10,000 kgs, when you issue a separate invoice, can I claim the credit as and when I receive the lot? Yes, because we will treat it as a separate supply. Is that clear? So if recipient want to claim the credit as and when the lot is received, better ask the supplier to issue separate invoice for each lot. In that case, credit can be claimed. But in the exam, if there is any question where they are told goods are received in lot, please assume one single invoice is issued. One single invoice is issued. So in that case, when recipient can claim the credit? Only when he receive the last lot. Only when he receive the last lot, guys. Yes, I have one illustration for it. Come to the illustrations which I have given below. After section 16, illustration number 1. Mr. A orders 30,000 tons of goods which are to be delivered by the supplier. Why? 3 lots, that is through 3 lots of 10,000 each in May, June and July. The lots are sent under a single invoice. Okay, that means for entire 30,000 tons, one invoice is given with the first lot and the payment is made by the recipient for value of supply plus GST. Okay. Invoice for entire 30,000 tons is sent along with first ton itself. Even payment is made and the supplier has also deposited the tax with the government. When can Mr. A avail the ITC? Is it for May, June or July, guys? July. Obviously, for July, he will claim credit in next month. But he is eligible to claim credit in which month? May, na, June, na, July? July for full 30,000 tons. For full 30,000 tons. That is when he received the last lot, guys. The 3 lots are supplied in May, June and July 2024. The entire ITC is available to Mr. A only after the receipt of third lot. The reason is simple. One of the conditions to avail ITC is the receipt of goods, which is completed only after the last lot is received, guys, or last lot is delivered. Oh, get back to the section. Yes, clause B is done. Next, let us move to BA. BA. Input tax credit in respect of any supply of goods or services or both is available to the registered person only if the details of input tax credit in respect of the said supply communicated to the registered person under section 38 has not been restricted. That means recipient can claim credit. Section 38 talks about GSTR 2B, guys. So whatever credit is reflecting in GSTR 2B of the recipient, no, he can claim the credit provided it is not restricted or it is not blocked. Sir, what is restricted? What is blocked is given in section 17. We will learn it later. Okay, that means, guys, just because the credit is appearing here, can recipient always claim the credit? No, no. If by chance what is appearing here, if it is restricted or blocked as per section 17, then no credit for it. No credit for it. Means in section 16 itself they are telling, if it is blocked or restricted in 17, we will not give the credit. We will not give the credit, guys, because the supplier might tell, we have satisfied all the condition in section 16, give me the credit. And that is what the intention of the supplier was. So in 17, they have given few cases where credit is blocked or is not available. So government thought, for safety, let us add one point here. Let us add one point here. They added it later. This was not there when the act was introduced. In order to safeguard themselves against the cases filed by whom? Suppliers. So what government did was, they added one condition here. As per section 16, if credit is blocked under section 17, we will not give you a credit. Okay, sir. BA done. Next, clause C. Clause C, subject to the provisions of section 41, the tax charged in respect of such supply has been actually paid to the government by the supplier, either in cash or through utilization of input tax credit admissible in respect of said supply. What they're telling is, whatever tax the supplier has deposited to the government, only if it is deposited by him, we will give credit to recipient. Sir, what if supplier has collected the money 18,000, but he has kept it in his own pocket? He didn't deposit it to the government. Will government give a credit to recipient? No. When they have not received the money, they will not give the credit of the same, guys. Is that clear? Yes. Now recipient, if he wants to claim credit, can he straight away claim it? No. He has to claim through what, guys? GSTR 3B. Means he has to give all these details. What is my output tax? What is my input tax? Remaining, how much am I paying through cash ledger? One important thing to note, whatever is the GSTR 3B due date is there, no? Whatever is the due date to file GSTR 3B, that is actually the due date to pay this 4,000 also. Whatever 4,000 has to be paid in this example, right, people? By whom? By the supplier. That is output tax minus input tax credit. 4,000 he has to pay through cash ledger. No. What is the due date to pay it? The due date to file GSTR 3B is the due date to pay 4,000. They are linked. The due date to file returns and due date to file GSTR, that is due date to file GSTR 3B is linked with due date of payment, not the due date of GSTR 1, because due date of GSTR 1 is different. Clear? Yes, sir. That means the person, whoever is liable to pay GST, they have to pay that amount and only then they have to file GSTR 3B, guys. Clear? Sir, without paying GST, will they allow me to file GSTR 3B? No. If there is a dues of 4,000 without even paying it, can I file my returns? No. First they will tell, pay and then file the returns. Okay, sir. So clause D now. E means who? Your recipient. As furnished the return under section 39, that is GSTR 3B. Guys, what is covered in section 37 is 1. What is covered in 38 is GSTR 2B. What is covered in 39 is GSTR 3B. So recipient has to claim the credit through which return? GSTR 3B, guys. Thus, a taxpayer should file GSTR 3B to avail ITC on his eligible inward supplies, guys. Okay, sir. Hope you understood. We understood all the clauses of what? Section 16, subsection 2. Section 16, subsection 2. And it has various proviso. First proviso we already covered. That is when the goods are received in lots or installment. We have one more proviso here. What is this proviso telling? Guys, please pay attention. I will try to explain with this example only. Now, let me go with this. Recipient was supposed to pay totally how much to the supplier, people? 1,18,000. But supplier has made a credit sales. He has made what? Credit sales. So he has given 2 or 3 months time to the recipient. But assume time of supply is falling somewhere in December. Somewhere December 2025. Okay. Now time of supply is on any day of December. What is the due date to pay GST, guys? 20th of January. Till 20th of January, recipient has not paid to supplier. So what should supplier do? He will deposit GST out of his own pocket on or before 20th January. Out of his own pocket, he will deposit GST to whom? To the department, guys. Okay. Now automatically once he pay it and file GSTR 1 giving the details of it, Will it reflect to the recipient in his GST or 2B? Yes, it will reflect. It will reflect, guys. Now, can recipient claim the credit of it? Yes, sir. Available, he will claim it. Sir, he has not yet paid. No problem. Government has got the money, no? Can recipient claim credit? Yes. What do we call this credit as? Bitty credit. Clear. Please don't use these words in your answers and all. So, recipient has claimed the credit. Okay, sir. No problem. But even after 180 days, Papa, recipient didn't pay to supplier. Supplier is full upset. He paid GST out of his own pocket. He didn't even receive 1 rupee from recipient. What should we do, sir? Now, recipient has claimed bitty credit of 18,000. No. After the expiry of 180 days from the date of invoice. Okay, let me write the date of invoice also here for easy sake. Date of invoice, let me take it as 15th December 26, guys. 15th December, sorry, 25 days. 25. What is the date of invoice? 15th December 25. So we need to count 180 days from here. So within 180 days from 15th December, payment is not yet made by recipient. Immediately after the expiry of 180 days, next GST or 3B, whichever he will file, no? Who? This guy. Whichever GST or 3B he will file after 180 days, in that GST or 3B, you need to reverse 18,000 credit. You need to reverse which, how much credit, guys? 18,000 credit. And along with interest. Along with interest. Correct? Interest is how much, sir? 18% per annum. When to when? From the date he has claimed the credit till the date he actually pay this. Reverse in the sense, guys. Reverse means he has to pay this 18,000. What he has claimed as bitty credit, no? Now he has to pay it along with 18% interest. 18% is per annum. So we need to calculate the number of days. From where to where? From the date this guy has claimed 18,000 credit till the date he actually pay it. Clear? Assume it comes to around 175 days or 185 days. So we need to calculate the interest for that many days. Clear? And please be careful. 180 days is from the date of invoice. Whereas interest is from when? From the date on which the recipient has claimed credit. On this day only, you would have not claimed the credit. Maybe assume he has claimed the credit in Jan month return or February month return. So whenever he has claimed the credit, no, from then interest will start. Clear? Because sometimes recipient, even though they got a credit, they may not use it immediately. They may use it in this month or next month, next to next month, like that, depending upon their output tax. Is that clear? So interest is not from 15th December. Interest is from which date? The date they claim the credit. Clear? But 180 days count is from when? From the date of invoice. Is that clear, guys? Yes. Sir, what if by chance, please listen. What if by chance recipient has paid, sir, he has paid only 50%. 50% means how much? 50,000 plus GST on that 9,000. Yes. He has paid 59,000, sir. Another 59,000 is discount. No. Supplier asked to pay, but recipient didn't pay within 180 days. So, recipient has already claimed a total credit of how much? 18,000. But he has paid only 50%. That means how much he has to reverse now after 180 days? 9,000. Only 9,000. What he has not paid has to be reversed. If he has not paid full amount, full 18 has to be reversed. No, sir, 50% is paid. 9,000 has to be reversed. Means what is not paid has to be reversed. Clear? Hope you guys got it. Yeah? Yes. Chalo, we'll go and read it. Proviso. Provided further that where a recipient fails to pay to the supplier of goods or services or both, the amount towards the value of supply, whether wholly or partly, along with the tax payable thereon, within a period of 180 days from the, guys, 180 days is from when, people? Please be careful. 180 days from the date of issue of invoice by the supplier. He shall pay or reverse an amount equal to ITC availed in respect of such supply proportionate to the amount not paid to the supplier, along with interest payable thereon as per section 50. Interest is covered in section 50. How much is the interest rate, sir? 18%. While furnishing the return in form GST or 3B for the tax period immediately following the period of 180 days from the date of issue of invoice. Is that clear? Yes. Guys, let us just take one example. Assume 180 days period. I'm just taking randomly. 180 days period is getting over. Assume in May. In May, any day of May. After that, which is the GSTR 3B will file. For May, he will file in June, right? For May, he will file in June, right? Yes. 180 days period got over when? In May. On any day of May. Okay, now. So after that 180 days, which is the GSTR 3B, he will file. For May, he will file in June. In that, he has to reverse. In that, he has to reverse. Guys, reverse in the sense nothing. Whatever he has already claimed as credit, that has reduced his liability, right? Now you pay that. Now you pay it. Through what, sir? Electronic cash ledger. Through electronic cash ledger. Okay. So as per section 50, what is the interest rate, people? Interest will be paid at 18% from the date of availing the credit till the date when the amount added to the output tax liability is paid. Added to the output tax liability is nothing but reversal of credit. So that means for May month, when 180 days will over in my example, May, any day of May. Okay, sir. So for May month, whatever is the output tax, no, assume output tax is already 50,000. For that, we need to add another 18,000 and pay it on or before 20th June. That is the due date to file GST or 3B for which month? May. Hope you're understanding. I repeat, for May already output tax is 50,000 for whatever outward supply is made. For that, what should we do? We need to add another 18,000 plus interest and pay it on or before the 20th June of that year. That is on or before filing GSTR 3B, guys, along with interest. Please be careful. And interest is not on entire 68. Interest is only on 18,000. Clear? That is the credit which was claimed. Yeah. However, once the recipient makes the payment of value of goods and or services along with the tax, he will be entitled to avail the credit again without any time limit. Guys, what they are telling is 180 days got over when? In May. So he reversed the credit in June. That is in May month return, which he will file in June, he reversed it. But recipient paid the money to the supplier in August. Can he reclaim the credit? Yes. He can reclaim the credit. Means if the amount is paid in the future, he can reclaim the credit. And to reclaim the credit, there is no time bar. There is no time bar, guys. Okay. There are few exceptions for it. Means in the following cases, guys, 180 days time is not applicable. 180 days time is not applicable. Means even if recipient has not paid, can he claim the credit? Yes, he can claim it. And logically, let us learn. Logically, let us learn, guys. You can easily remember. Exceptions. This condition of payment of value of supply plus tax within 180 days does not apply in the following situation. Means this 180 days is not at all applicable in the following cases. Which are those? Let us reconnect. All these are our history now. Supplies on which tax is payable under reverse charge. Guys, look at the beauty now. Now, sir, if RCM is applicable, assume for this supply, RCM is applicable. How much will supplier collect? Only 1 lakh. Only 1 lakh. He will not collect taxes. Why so? Because the recipient is the one who is liable to pay GST. How much GST should recipient pay himself? 18,000 as RCM. Correct? Now, only after he pay 18,000, he will get a credit. Without even paying, can he claim a credit? No. Logical, right? When you are the person who is liable to pay GST, first pay, then we will give credit. Then we will give credit. Now listen, please listen. Assume recipient has paid 18,000 to the government, but he didn't pay 1 lakh to the supplier. Supplier, it is your headache. We got our money. Correct? Our department is like, we got our money. Thank you. We will give the credit. Understood? When RCM is applicable, the liability is on whose head? Recipient. Only if he pay that, he will get a credit. Agree? Yes. So he paid, got the credit, claimed it. Good. But he didn't pay 1 lakh to supplier. Let him take care. We don't care about it. Clear? Yes, sir. So here there is no 180 days concept. Understood? Yes. Next one. Deemed supplies without consideration as per section 71C, read with schedule 1. Para 1, 2, 3, 4. Para 1, 2, 3, 4, which will tell even without consideration, it is still a supply. Vishwas, you tell when there is no consideration, what will recipient pay? What will he pay? Nothing. But in GST, they are telling it is still a supply. Supplier has to pay GST. Supplier paid GST out of his own pocket. Recipient got PT credit. Now, will 180 days be applicable now? No. What should he pay now? It is without consideration. What will he pay? Understanding? Yes. So, as there is no consideration, but still Schedule 1 is telling assures it is a supply. Still Schedule 1 is telling it is a supply. In that case, there are two possibilities. Supplier paid GST out of his own pocket on the value fixed as per valuation rules. Can recipient claim the credit? Yes. Second option is, can supplier collect only GST amount from the recipient? Anyway, is giving it freely, supply. At least can he collect GST from the recipient and deposit it? Yes. If recipient is okay with it, he can collect GST from the recipient and deposit it to the government. In this case, can recipient claim the credit? Yes. In both the case, recipient can claim the credit. But as there is no consideration, they cannot block, they cannot restrict the recipient telling you cannot claim credit because you have not paid anything to the supplier. Clear? Because Schedule 1 told, even if there is no consideration, in the following 4 cases, it is still a supply. When there is no consideration, what will recipient pay to supplier? Got it? Yes. Last one, C. We learned this in the previous chapter. Okay, first let me explain. Listen, guys. As per section 15(2)(b), if the liability of the supplier is paid by recipient, should it be added to the value of supply? Yes. For example, assume I am the supplier, you are the recipient. I am the supplier, you are the recipient. I was supposed to pay 20,000 to my supplier. I asked you to pay. Whom did you pay for? Not me. For the person for whom I was liable to pay. But will it be added in my value of supply? Yes. So should I pay GST now on 20,000? Yes. But I didn't receive it. Even after 180 days, you didn't give me. Should it be reversed? No, guys. Why? Because you paid it to someone for whom I was liable to pay. It is as if paid to me. As if paid to me. So on this, whatever GST I would have paid or I would have collected from you and I have paid, can you claim the credit of it? Yes. Even though you are not paid me directly, still you can claim the credit for the same because it is as if you have paid me. Additions made to the value of supplies on account of supplier's liability in relation to such supplies being incurred by the recipient of supply as per section 15(2)(b). In simple, liability of the supplier paid by recipient. To whom? To the third party. To the third party, guys. Okay. So in the following case, no 180 days concept, guys. So for this, I have an illustration. Come to the next page. Illustration 1 we have covered. Let us go to illustration 2 now. Illustration 2. Invoice is dated on 1st January 2023, received by the recipient involving taxable value of 1000 rupees and input tax 180. The recipient availed the credit against such invoice on 30th January 2023. Okay, he has already claimed the credit. It made a payment to the supplier against such invoice on 30th September 2023. Payment date is 30th September 2023 after 180 days. What is the date of invoice, people? 1st January 2023. 180 days from here. Is it before 30th September? Yes, sir. So it was not paid within 180 days. So that means what should we do? After the expiry of 180 days from 1st January, the recipient has to reverse a credit of how much? 180. 180, guys. Let us see this. In this case, since the recipient fails to make the payment to the supplier within 180 days from the date of invoice, it is liable to add such credit in its output liability, that is output tax liability, immediately on the expiry of 180 days from the date of invoice. So let us take 180 days will end in June. Okay, because approximately 6 months. Correct? 180 days. Exactly not 6 months. Please be careful. Approximately 6 months. So I will take it as it 180 days got expired in June. So when should he reverse it, guys? For June, he will file GST or 3B when? in July. In June month GST or 3B, which you will file in July, you need to reverse it. How much, sir? 180 only. Obviously, credit is only 180, not 1180. 180 along with interest. But interest is from when? 1st January, yeah? No. Interest is from 30th January. Till what date? Till the 180 is paid by recipient. Assume he is paying it on 20th July. So interest will be on 180 rupees from when to when? 30th January to 20th July. 20th July. Hope you understood. I repeat. Guys, this much detailed calculation and all they may not ask, but good to know. If they want to frame the toughest question here and all, they may play around. Please listen. When the invoice was issued? 1st January. Is the payment made within 180 days from 1st January? No. Let us consider 180 days is ending in any day of June. Any day of June. Okay, sir. Now, after June, which is the GSTR 3B which will be filed for June, but in July. So, in that June month, GSTR 3B which is to be filed in July, this 180 has to be reversed. 180 has to be reversed. Assuming the recipient is paying this 180 rupees on 20th July. 20th July, along with GST or 3B of which month? June. So interest is at 18% on 180 rupees from when to when? From 30th Jan, the date of availing the credit, till 20th July. Till 20th July, guys. Is that clear? Yes, sir. Additionally, it is liable to pay interest on 180 rupees at 18% calculated from the date of availment of ITC. That is from 30th Jan 2023 until such addition in the output tax liability is paid. Sir, what if it is further delayed? He didn't pay on 20th July also. He is paying it in August or September or interest will be keep on running. Okay. Yes. However, recipient can reavail the credit on 30th September 2023 when he made a payment to the supplier against such invoice. Actually, when did recipient make the payment? 30th September. So, can he get back the credit of 180 rupees, guys? Yes. Sir, will he get it? Interest also? No. Interest gone. Undi. Okay. 180 credit, you can reavail. You can reavail. Yes, sir. Done with this. Come back. I have put lot of examples and illustration then and there only so that you will get 100% clarity about the provision and how to apply it. Both. Okay, guys, please be careful. Listen. Under section 16 subsection 2, there are various clauses A, AA, B, BA, C and D. Should all this condition be satisfied? Yes, it has to be satisfied. Sir, everything is satisfied. One is missing, sir. Sorry, no credit. No credit. And also they have given two proviso. I have read both of this and both of these are important. Please be careful. And if you observe all this combined, I have given it in one chart, guys. Clear? See, on the exam days and all, maybe now if you have done a thorough study, thorough reading on the exam day and all, you can just go through this. So much story, sir, will I have time to go through? Maybe not. Clear? And if you have done thorough study now, if you just read this point, you will be able to connect what you have studied. Clear? Yes. So this and all plays a very major role during your exams or even for your revisions and all guys. Once in a while, maybe once in 20 days, once in 15 days, even after tax class, open this book. Remember GST, remember income tax. Maybe keep on revising, guys. If not, now you would have studied really well. If you give too much of gap, then you will feel like, assume after 180 days, you open the books. After 180 days, you open the book. After 6 months, just before the exam. Which subject is this? Who taught this? Somewhere I have seen this book. Correct, Alupna? Yes. It will happen like that. So don't let the subject to overrule you guys. Please be connected with the subject. Don't get disconnected. Alva. Iga Bluetooth. When there is a Bluetooth or Wi-Fi, only when it is close to it, it will be connected. If you go far away, disconnect. Like that, you don't disconnect with the subjects. I'm not only talking about tax, any subject, guys. Any subject. Once along with the class, you would have studied. But maybe every now and then, maybe once in 15 days, 20 days, please reopen the book, revise. And I tell you, for revising, you will not take the same amount of time which you took for your first study. Assume for first study, for this chapter, you invested almost 10 hours. 10 hours, so much is there. Okay. So assume totally you invested 10 hours. Next time when you are revising, should you reinvest again 10 hours? No, guys. When you are repeatedly studying, assume you are studying for third or fourth time, same topic, you will not invest the same amount of time. And for that, you should make sure that your first study is going really well. If you make sure that your first study is going in detail, in thorough study you have done, then your revisions and all will become very easy, guys. Okay, chalo. Subsection 2 done completely. Now let us move towards subsection 3. Connected to income tax. Connected to income tax. Let us revisit income tax. You need not open the income tax book. I will only tell. Section 43 subsection 1, which talks about actual cost of an asset. Where did we learn this? When we were discussing about the depreciation under section 32 in PGBP head. When we were discussing about depreciation under section 32, if any asset is purchased during the year, should we calculate the actual cost and add it to the block, guys? Yes. Sir, how do we calculate the actual cost? It includes purchase price plus GST plus all the expenses which is incurred before the asset is ready to use. Before the asset is ready to use, which includes installation, loading, unloading, everything. Correct? Yes. We will capitalize it. So assume we have totally incurred a cost of 1,50,000. We will add 1,50,000 to our block and start claiming depreciation on it. And there we also learned if it is less than 180 days what, more than 180 days what. Okay, more than 180 means full depreciation. Less than 180 means only half of the depreciation in that year. Asset acquired and put to use during the previous year. Now the key point, sir, what is connected to GST? Guys, if GST is paid on the purchase of an asset, there, did we add it to the cost? We learned there that only if credit is not available in GST, we will add it to the cost. What if credit is available? You will get the benefit in GST. So should we add it to the cost? In income tax? No. Means don't claim both the benefit. Either you claim depreciation in income tax or you claim credit in GST, but not both. But not both. So you can just mention here red with R/W you can write. Red with. Above that subsection 3 you write. Red with section 43 subsection 1 of Income Tax Act. Read with section 43 subsection 1 of IT Act. Quadresh. IT means what? Information technology. Income tax. Good. Chalo. And actually you can remember that easily also. 43 subsection 3. 43 subsection 3. Subsection 3 is in GST. Don't mix match both. Okay. Section 16 subsection 3. Whereas in income tax it is 43 subsection 1. 43 subsection 1 talks about what, people? Actual cost. Actual cost of an asset. Okay. Subsection 3. Where the registered person has claimed depreciation on the tax component, tax year means GST, of the cost of capital goods and plant and machinery. Capital goods and plant and machinery is nothing but fixed assets. Under the provisions of Income Tax Act 1961, the input tax credit on the said tax component shall not be allowed. Means either claim depreciation on GST component or claim credit. Don't get both the benefits. In other words, either depreciation on the GST component can be claimed under the Income Tax Act or ITC of such tax paid can be availed under GST law. Not both, guys. Okay, we have an illustration for it, but before that, I have made one chart for this. Yes. Okay, before this, okay, let me just explain the example, then I will go to the chart. Please listen. Assume the supplier purchased the capital goods or plant and machinery for 10 lakh. What is the value of supply? 10 lakh. On which GST applicable is 18%. So the GST amount comes to how much? 1 lakh 80,000. So totally he paid how much to purchase this asset, guys? 11 lakh 80,000. Now we are discussing about, sir, 10 lakh is no doubt a cost. 10 lakh, no doubt it is a cost. We will add it to the block. What about this 180? We have two treatment for it. Either of this, not both. Okay, sir. So what is option 1? What is option 1 in income tax? Take actual cost as 10 lakh. So that means you will add how much to the block of the asset? 10 lakh. You will start claiming depreciation on how much? 10 lakh. That means, can you get a credit of 1,80,000 in GST? Yes, you can claim the credit. That means 1,80,000 can be adjusted against output tax in GST. In GST. This is option 1. Option 2 is, sir, we will consider actual cost in the income tax as how much? 11 lakh 80. So I will add how much to the block of the asset? 11 lakh 80,000 and start claiming depreciation on how much? 11 lakh 80,000. Okay. And in GST, can I claim ITC? No. ITC not available in GST. The amount of ITC is how much? Nil. Is that clear? So if you ask me, sir, what is better? Is ITC better or depreciation better? ITC. Because time value of money is there. ITC means I can claim immediately now itself. Either in this month or next month or next to next month. Within few months, I can claim it. Whereas if it is depreciation, I have to wait for number of years. Number of years means what, guys? Simple. Listen here. In this example, we will add entire 11 lakh 80,000 to the block of the asset. Yes. We will start claiming the depreciation. Yes. Assume the depreciation rate for the block is 15%. 15%. So every year I will be claiming 15%. Can I claim entire 180 in the 1 year only? No, no, no. You will claim it over the life of the asset. So you will not get the entire benefit in 1 year. So this 180, whatever is the GST component, no, you can claim it as depreciation, but over a period of time. Sir, what is the benefit of getting the depreciation? Guys, simple. Depreciation, you will debit it to P&L account. Automatically, your income will go down. You will end up paying less tax. Where? In income tax. Correct? I repeat. Is depreciation allowed as an expenses? Yes. When you have capitalized more amount in income tax, you will claim more depreciation. Yes. Higher the depreciation, lower will be the income. As the income is lower, tax liability also will be lower in income tax. Yes. But in that case, will your tax liability come down only in 1 year or over a period of time? Over a period of time. Why, sir? Because entire 1,80,000 is not claimed as depreciation in 1 year. It will be claimed for number of years. Clear? Yes. Whereas under GST, if I am claiming a credit of 180, I can claim it immediately. Maybe in this month or next month, next to next month, or within a short period. So if you ask me, sir, which is better? Should we add GST to the cost and claim depreciation in income tax, or should we claim credit? We should claim credit. We should claim credit. But what for any reason credit is not available, sir? Credit is blocked, sir, in GST. Then what do you do? What do you do? You will add it to the cost. You will add it to the cost and start claiming depreciation. So what would be the actual cost for income tax purpose in that case, guys? 11 lakh 80,000. You will add the asset to the block at how much value? 11 lakh 80,000. Is that clear? Yes. If you remember, I had explained this even when I was covering section 43 subsection 1, that is under depreciation topic. So in simple, now if I have to summarize through a chart, it is like this, guys. GST paid on the purchase of capital goods or even plant and machinery. First check, is ITC claimed in GST? If yes, then no depreciation under income tax on GST, not to be added to actual cost. So what will be the actual cost as per my example? Only 10 lakh. Only 10 lakh. Coming to the other part. No, sir, ITC is not claimed or else it is blocked in GST. Then I am left with only one option now. What should I do? Depreciation will be allowed under the income tax on what? GST component. So can I add that GST component to the actual cost? Yes. In this example or as per this example, what will be the cost of the asset, guys, to claim depreciation? 11 lakh 80,000. Whereas as per this case, how much it will be? 10 lakh. because I have claimed the credit of how much people? 1,80,000. 1,80,000. Let me write nil here. Understood? Yes. We have one illustration here also. Let us see. Illustration number 3, guys. Mr. X has procured a machinery for 25 lakh and paid GST of rupees 4,50,000, 18% GST on how much? 25 lakh. On 25 lakh, 18% GST comes to 4,50,000. He has capitalized the invoice value and will claim depreciation of the entire invoice value, 29,50,000. In simple, to claim depreciation under income tax law, they're telling actual cost is 29,50,000, including GST component. That means, is credit available under GST, guys? No. Please advise on the availability of input tax credit. If the depreciation is claimed on the ITC component under the Income Tax Act 1961, ITC cannot be availed, and hence Mr. X will not be able to avail ITC in this case. Okay, either depreciation or ITC, not both. Is that clear? Yes. Just make a note of this. First, you take down the example, then you will take down the chart. You can just give an heading, section 16, subsection 3. Section 16, subsection 3, and take down this. First this one, and next this one. Yes, now we will get into subsection 4. We have done till subsection 3. Subsection 4 will give the deadline to claim credit. Now, just because recipient is eligible to claim credit, can he claim it whenever he wants? No. There is some deadline. There is a deadline drawn to him. On or before that, he has to claim it. On or before, he has to claim it. Guys, first of all, when credit is available to the recipient, is it a benefit or loss? Benefit. He will try to claim and use it as early as possible. Correct? Yes. But still, they are giving some deadline which will fall in next year. They are not telling credit of this month has to be claimed next month only. If not, close on that. No. They will give you a good amount of time. Even within that, if you are not yet claimed, gone. What? Credit. Sir, after that, I want to claim. No, sorry. Thank you. That's all. A registered person shall not be entitled to take input tax credit in respect of any invoice or debit note for the supply of goods or services or both after. Means, after this date, he cannot claim it. So, what is it, sir? 30th November of the following financial year to which such invoice or debit note pertains to, or actual date of furnishing the relevant annual return, whichever is earlier, guys. Please be careful. Please listen. Assume the invoice is relating to any month or any day of financial year 25-26. Any month, any day of financial year 25-26. They're telling maximum you can claim it within what time? 30th November of next financial year. Next financial year means which year, guys? 26. Not 27, 26. Because next financial year would be 26, 27. So November will fall in 26. Whereas Jan, Feb, March will come in 27. Got it? I repeat. For any invoice issued in between this year, that is from 1st April 25 to 31st March 2026, you can maximum claim the credit within what time? 30th November of next year. Or for this year, you will file an annual return. 3B is different. There is one more annual return. 1 and 3B is monthly, or if you are following QRMP, quarterly. But there is one more annual return, which is in GSTR 9. Annual return will file in which form, people? GSTR 9. Listen carefully. To file GSTR 9, the due date is 31st December of next financial year. 31st December of next financial year. For example, for this year, if I have to file annual return, what is the deadline, guys? Deadline is 31st December 26. On or before that, we need to file an annual return, that is GST 9. But here, they are not giving reference to due date. They are talking about actual date. Deadline is 31st December. I can file it any day before that also, no? Yes. For example, assume I have filed it on 15th December. Then, what is the date here? 15th December, people. 15th December 26. Whichever is earlier is what? 30th November. So for any invoice relating to 25-26, I can maximum claim the credit within what time, guys? 30th November 2026. Is that clear? Yes. Sir, what if the actual return is filed on? Just a minute. I will change the month. Actual return is filed, that is annual return, on 15th October 2026. 30th November or 15th October, whichever is earlier, guys. 15th October. So for any invoice or debit note which is relating to 25-26, what is the maximum time limit to claim credit? On or before 15th October. Sir, after 15th October, if I still have any credit, can I claim it? No, sorry, time is over. Time is over. Is that clear, guys? Yes. Normally speaking, if I get a credit in any month, I will try to use it in the same month or maybe next month, next to next month. Because that is a benefit given to me. I will try to utilize it as early as possible. But they are telling, if you don't use it within this date of next year, we will not allow you. We will not allow you, guys. Exception is the time limit under section 16.4 does not apply for re-availing the credit that had been reversed earlier. Okay. Now listen, guys, that 180 days, let us go back to that. 180 days. Recipient has claimed BT credit, free credit, because he didn't pay it to the supplier still. After 180 days, if he has not yet paid, should he reverse it? Yes, he has to reverse it. Now assume on 250th day, recipient paid the amount. To whom? To the supplier. So can he re-avail the credit now? Yes, he can re-avail the credit. For re-availing the credit, is this deadline applicable? No. Why so? Because it was already availed. Later it was reversed. Now we are re-availing it. So for re-availing the credit, this time limit is not applicable. Time limit is not applicable, guys. Whatever is given here. So we have totally 3 illustrations for it. We will see. Come to the illustrations. Okay. So if I have to explain, guys, just listen. In illustration 2, now when actually recipient paid on 30th September 2023, can he re-avail the credit of 180? We are talking about illustration 2. Can he re-avail the credit? Yes. Sir, what if by then already time is over? Can he still re-avail? Yes, he can re-avail. Means whatever is the deadline given under section 16.4, it is not applicable for re-availing the credit. Why, sir? Originally credit was already availed, sir. Due to some reason, we asked you to reverse it. Once you reverse and re-avail again, for that time limit will not be applicable. Okay, sir. Fine. Now coming to the illustrations on subsection 4, guys. Illustrations, whatever we'll be seeing now is on subsection 4. Please observe the dates and year, very important. Invoice is dated on 31st July 2024. Okay, guys, 31st July 2024 will fall in which financial year? 24-25. For that year, annual return is filed on what date? 20th October 2025. Actually, due date is 31st December, but they have filed it well before that. What is the actual date of filing the annual return for 24-25? 20th October. Okay. Guys, for this invoice, what is the deadline to claim credit? Invoice is related to financial year 24-25 and annual return for 24-25 is filed by the person on 20th October. By which person? Recipient. Because who will claim credit? Recipient. But who has issued the invoice? Supplier. Invoice is dated on what day? 31st July 2024, which fall in financial year 24-25, guys. So for this year, recipient has filed the annual return on 20th October. And what is the standard date, people? 30th November of next year. So invoice was relating to 24-25. 30th November of next year means which year? 2025. 2025. So now compare both the dates. 20th October or 30th November. Whichever is earlier, people. 20th October. 20th October. Now, for this invoice, what is the deadline to claim credit, people? 20th October. 20th October. Not only for this return, not only for this invoice, any invoice issued in the financial year 24-25. I have just taken one invoice as an example. Clear? Yes. So with respect to this invoice, the credit totally was 1,800. So this credit can be claimed on or before what date, people? 20th October. Sir, can recipient claim it in GSTR 3B of October? When will he file GSTR 3B for October, guys? On or before 20th November. By then already time is over. So can he file it? Can he claim the credit in October month return? No. Simple, please listen here. Whichever GSTR 3B will file on or before 20th October, he has to claim it in that return. So for now, what is the GSTR 3B will file on or before 20th October? The last return which he will file is for which month? September. September month GSTR 3B has to be filed on or before 20th October. So maximum he can claim 1,800 credit in which month returns, guys? September 2025 GSTR 3B. I've given it here. Listen. In this case, recipient will be able to claim input tax credit not later than 20th October. ITC needs to be claimed and to be reported in which form, guys? We already learned. Recipient will claim the credit through which return? GSTR 3B. For September 2025, due to be filed on or before 20th October. Now you might also question me, sir, deadline is 20th October, no sir? So we will claim it in GSTR 3B of October month. GSTR 3B of October month you will file when? In November. By then time is already expired. So can you claim this credit in October month GSTR 3B? No. Simple, guys. What is the deadline to claim credit? 20th October. You can claim the credit of this invoice on any day in GSTR 3B which is filed on or before 20th October. That means what is the last return in which you can claim? September month GSTR 3B. Sir, can I claim it in August, July, June and all? Yes, no problem. But deadline, we are talking about deadline. What is the deadline? GSTR 3B of September, which you will file on or before 20th October. Is that clear? Now there can be a chance like this also. Please listen. Now assume September month GSTR 3B is filed delayed. Is delayed. He filed it on 22nd October. Tata bye to 1,800 credit. You can file GSTR 3B, you can delay. For that, there will be some late fee and all. But can you claim credit? No. Why? You are filing September month GSTR 3B on 22nd October. But the deadline was already on 20th October. Government will tell, thank you for contributing for our undi. You cannot claim credit on. Understood? Huh? Yes. So please be careful. You can claim the credit in GSTR 3B which has to be filed on or before this deadline. I have put few more illustration, guys, because more clarity is required for this. Especially with dates and years, there is a chances of getting confused. Please be careful. Illustration fine. A Limited received an invoice dated 10th April 2024. Okay. Invoice is relating to which year, people? 24-25. Containing the input tax of how much? 1 lakh. A Limited filed its annual return for year 24-25 on what day? 31st August 2025. Okay. Now let us come to the answer. Invoice is related to which year? 24-25. And annual return for 24-25 is filed on what date? 31st August 2025. One of the dates. And what is the standard date? 30th November of next year. As invoice is relating to the annual financial year 24-25, I need to take 30th November 2025. So both the dates we have got it. Now lock whichever is earlier. 31st August or 30th November, whichever is earlier, guys. 31st August. So earlier of the two dates is 31st August 2025. In this case, A Limited, guys. Who is A Limited, supplier or recipient? For this example, recipient. A Limited will be able to claim input tax credit not later than 31st August. Hence, A Limited will have to avail and report such input tax credit in GSTR 3B for the month of which month? July 2025 to be filed on or before 20th August. Sir, can A Limited claim this 1 lakh credit in August month return, sir? For August month, GSTR 3B will be filed when? In September. By then, time would have already been expired, guys. So that means they cannot claim in GSTR 3B of August. They have to claim maximum by what time, guys? July month GSTR 3B or before that. Or before that. Yes. Got it? Huh? Yes. This was about invoice. Sir, what about debit note? You know what is debit note? This is a document issued by supplier to recipient to charge extra amount, which he had missed it in the invoice. Okay. Illustration 6. A debit note dated 7th July 2024 is issued in respect of original invoice dated 16th March 2024. Okay, guys, simple. Please listen. Invoice was issued on what day? 16th March 2024. Relating to financial year 23-24. With respect to this invoice, debit note is issued on what day? 7th July 2024. Which year? 24-25. 24-25. Please listen now. Listen. Guys, with respect to debit note, assume invoice was issued originally for 1 lakh plus 18,000 GST. Total amount is how much? 1 lakh 18,000. So, listen, for this 18,000 credit, what is the maximum deadline as per section 16 subsection 4? For that, which year should we consider? We need to consider the year 23-24. Which year, guys? 23-24. So for that, 30th November of 2024 we have to take. Or the actual date of filing annual return for which year? 23-24. Got it? Huh? Whichever is earlier will be the deadline to claim 18,000 credit. Now, sir, what about debit note? Assume debit note is issued for another 50,000 extra. 50,000 plus 9,000. So total comes to how much, people? 59,000. Sir, what is the maximum deadline to claim the credit for this 9,000, sir? 18 I already done. 9,000. Guys, debit note was issued in which year? 24-25. So for this, if I have to count the deadline, it will be 30th November of which year? Next year. So I can call it as 30th November 25. And we need to see for this year when the annual return is filed. Let me take it as 15th November. 15th November 25. Whichever is earlier, guys. 15th November. So what is the maximum deadline to claim this 9,000 credit, people? It is 15th November 2025. Is that clear? So what I am trying to communicate here is, with respect to the ITC which is mentioned in invoice, to count the financial year, which date should I take? Invoice date. Whereas with respect to the input tax credit which is given in debit note, which date should I count to check the year? The debit note date. Debit note date. Sir, this debit note is given with respect to this invoice, sir. Okay, let us treat it as two separate document. For this, the year would be 23-24. Whereas for debit note, the year would be 24-25. Is that clear? Yes. Let us see the answer. As the invoice pertains to 23-24, hope you guys understand. 23-24, that is in March. So please take 23-24, not 24-25. By mistake, you might take 24-25. Always financial year. And here it is March. Will it fall in 23-24 or 24-25? 23-24. Okay. As the invoice pertains to financial year 23-24, the relevant financial year for availment of ITC in respect of said invoice would be what, guys? Financial year 23-24. When I take 30th November of next year, it would be 30th November 2024. And we also need to check the annual return for this year is filed when? Compare both the dates, take whichever is earlier. Coming to the debit note. However, as the debit note has been issued in the financial year 24-25, you can observe This will fall. July will fall in which financial year, guys? 24-25. The relevant financial year for availment of ITC in respect of said debit note shall be which financial year? 24-25. If I have to take 30th November of next year, it would be 30th November 2025. And we should also check for this year when the annual return is filed. In my example, I have assumed it to be 15th November 2025. I need to take whichever is earlier. Whichever is earlier. Got it? Yes, that means simple, guys. For the deadline, we need to take invoice date for GST on invoice and the debit note date for GST on debit note separately. Don't club both. Clear? Yes. And here in my example, I had given these two dates as different years. Sometimes it can both can fall in same year also. For example, sir, invoice was issued in June, but it was issued for less amount. Again in August, we issued debit note with respect to this invoice. Both is falling in the same year. So what would be the financial year? Same year. Possibility is there. Possibility is there. But here, in order to give more clarity, I've just taken two different years. One is for invoice, the other one is for debit note, guys. Got the clarity? Yes, sir. Please be careful. Whatever illustration, whatever examples I have given can come as a question in the exams. Yeah, come back now. Subsection 4 done. Subsection 5 is not relevant as on today, so you need not worry about it. Subsection 6, important, but I will not do it now. I will not do it now. Why, sir? Because it is connected to section 29 and 30, which is a part of registration topic. Without even knowing section 29 and 30, you will not be able to understand this. So I will cover this along with registration topic. Just right there, read with section 29 and 30. Section 29 and 30 is a part of registration topic, guys. Next chapter, I will teach there. Because why did you stare me like that? When I told I will not cover, why did you stare me like that? I told I will not cover now. Chalo. Understood? 6 we will keep pending. Remind me when I am doing section 29-30. Which is the next chapter itself. Okay. Silence. Shh. There is one rule, we will cover it. Section 16 done. We have one rule connected to that. We will just cover that rule. Silence. Rule 37A. Reversal of input tax credit in case of non-payment of tax by the supplier and reavailment thereof. Rule 37A. What is it, sir? Guys, this is just added as a safety point. I will just explain through my example. Listen. Silence. Let me take this example itself. Supplier supplied the goods or services to the recipient and he charged 1 lakh to the recipient plus GST on that 18%, 18,000. 1 lakh 18. Assuming he collected full 1 lakh 18,000, deposited 18,000 with the government, filed GSTR 1. Filed GSTR 1. Game over? Yes. Recipient claimed the credit. It appeared to him, he claimed the credit. But the problem was the supplier didn't file GSTR 3B. He didn't file GSTR 3B. Who? Supplier. Recipient has filed it. He has claimed the credit through GSTR 3B. But supplier didn't file it. Guys, please listen. Assume all this activity happened in December 2025. December 2025. So for December 2025, when should this guy file GSTR 1 on or before 11th Jan? And when should he file GSTR 3B on or before 20th Jan? But he didn't file. He didn't file, but all the conditions given here was satisfied. So recipient claimed the credit. No problem, sir. Rule is telling we will wait till 30th September of next year. 30th September of which year? Next year. So 30th September of, guys, please be careful. This credit was relating to which year? 25-26. 25, 26. So they told we will give time to the supplier to file this GSTR 3B till what time? 30th September 2026. Still, if he has not filed, he has filed GSTR 1, but he has not filed GSTR 3B for which month? December. Actually, for December GSTR 3B, what is the deadline? 20th January. But he has not yet filed till 30th September. Now the recipient, department is calling recipient, please come here. Recipient went obediently. They told, your supplier didn't file GSTR 3B, so please reverse the credit. Within what time? Within 30th November 26. Within this time, it has to be reversed, guys. It has to be reversed. What? ITC. Whatever ITC has already been claimed by the recipient has to be reversed by whom? Recipient. Papa, default is whom? Supplier. For the default of supplier, they are punishing whom? Recipient. Why? Recipient. Why did you have transaction with supplier? This kind of supplier. Clear. So it is just a push given by department to whom? Recipient. Now recipient will go in front of the office of whom? Supplier. Dharani. Telling you didn't file GSTR 3B, for that they are not giving me credit. First file and clear. So they are making recipient to give push to whom? Supplier. Strategy played by department. Let us reduce our efforts. Let us give the work for whom? Recipient. If you want to claim credit, let him push the supplier to file GSTR 3B. Already one is filed. But if there is a default in filing 3B, we will take back your credit. When we take back the credit from recipient will be Labo. He will go back to supplier. He will go back to supplier. Tell, Array, I will not purchase again from you. Because of your default, I am penalized. Obviously, this will disturb the business of whom? Supplier. This is the intention of government. If you are non-complying with the provision, or if you are not complying with the provisions, you are a non-compliant filer, then I will punish you not only with late fee interest penalty by disturbing your business. Correct now, people? Simple. Just assume yourself as a recipient. You claimed credit, but later department took back that because supplier didn't file GSTR 3B. Will you feel like going back to the same supplier to purchase again? Maybe not. Maybe not. So they are disturbing the business of supplier through this. Yes. Hope you understood. I repeat, please listen. Simple. Sir, supplier has deposited tax with the government. He has filed GSTR 1. Automatically, all the conditions were satisfied here. Recipient claimed credit. Aram se he was focusing on his business. But supplier filed GSTR 1, but didn't file GSTR 3B. For which month? For December month. What is the due date to file GSTR 3B of December? 20th January. But Papa, Rule 37A is telling, I will not reverse it on 20th January only. I will give time till 30th September. If GSTR 3B is not filed by the supplier till 30th September of next year, recipient, please come forward. You reverse the credit on or before 30th November. What if recipient doesn't reverse it on or before 30th November? He has to reverse it even after 30th November. But from 1st December, interest will start, sir. For whom? Recipient. That means still here no interest, huh? No, Papa, because the mistake was not of recipient. If it is reversed before this date, no interest, Yashwant. No interest. But if it is reversed after this date, you have to reverse, but along with interest. Along with interest, guys. Chalo, let us read it. Reversal of input tax credit in case of non-payment of tax by the supplier and reavailment thereof. Rule 37A. Rule 37A covers a situation where a registered person, that is the recipient, avails ITC in GSTR 3B for the tax period. Okay. Recipient filed GSTR 3B. He claimed it in respect of such invoice or debit note, the details of which have been furnished by the supplier in the statement of outward supplies in form GSTR 1 or as amended by form GSTR 1A. I told you what is 1A, guys. If there is any mistakes in 1, that can be amended through what? GSTR 1A. GSTR 1A is not a separate return. It is just for correcting the mistakes made in GSTR 1, if any, or using invoice furnishing facility. In simple, supplier has filed GSTR 1, it got auto-populated to the recipient in GSTR 2B. Recipient claimed the credit of this in which form? In which return? GSTR 3B. Who filed GSTR 3B? Recipient. Okay. However, supplier does not furnish return in GSTR 3B for the tax period corresponding to the said statement of outward supply till 30th September of following the end of financial year in which ITC in respect of such invoice or debit note has been availed. Guys, they are not telling GSTR 3B has to be filed on 30th September. Anta. No. What is the due date to file GSTR 3B? 20th of next month. But here rule 37A is giving much more time for you. Till when? 30th September of next year. In such a case, the said amount of ITC shall be reversed by the said recipient while furnishing a return in form GSTR 3B on or before what date, guys? 30th November. Following the end of such financial year during which such ITC has been availed. Simple, guys. After 30th September, if still GSTR 3B is not filed by the supplier, supplier is in default. Now, who is punished? Recipient. Recipient has to reverse its credit through which return? GSTR 3B of not supplier. Hello, supplier GSTR 3B cannot be filed by recipient. Now, recipient will file GSTR 3B for him. For which month? Assume for September or October. In that he has to reverse it. Sir, can he reverse it in November month GSTR 3B? When will he file it? In December. Interest starts. Interest start. So recipient has to reverse the ITC which is already claimed on or before 30th November. On or before 30th November. In which return will he reverse, sir? GSTR 3B. Can he reverse it in November month GSTR 3B? No. Why? Because for November GSTR 3B will filed in December. By then the time would have already been over. Even if he reverses, he can reverse, but along with interest from 1st December. From 1st December, guys. However, where the set amount of ITC is not so reversed by the recipient, such amount shall be payable by the said person along with interest thereon under section 50, guys. What is the interest rate under section 50? What is the interest rate, people? 18%. We already saw above, no? Same interest rate. 18% per annum. Further, where the said supplier subsequently furnishes the return in form GSTR 3B for the said tax period, the said registered person may re-avail the amount of such credit in the return in form GSTR 3B for the tax period thereafter. Means, guys, let us connect to this example. Assume supplier didn't file GSTR 3B for December till 30th September 2026. So, Papa recipient reversed it. On or before 30th November, he reversed it. Supplier realized his mistake. His business was completely impacted because of it. Now he realized his mistake and filed the GSTR 3B for December 2025 in December 2026. Understood? I will repeat. Supplier filed GSTR 3B of December 2025 in December 2026. That is after the recipient reversed it. Now, once the supplier filed the GSTR 3B, can recipient re-avail the credit? Yes, he can re-avail the credit. Sir, what if it is after 2 years, after 3 years also? He can re-avail. Who? Recipient can re-avail. But obviously, guys, when there is a delay in filing the returns, the supplier will be levied late fee for it. Late fee that is given in section 47. We will learn that in returns chapter, guys. Understood? Huh? Yes. This is all about rule 37A, people. Rule 37A. Yes. So we are completely done with section 16, guys. We have few clarifications which we will see next. Yes, students. Now we have few clarifications with respect to section 16. What are those? We will see. Totally, we have two clarifications. One by one, we will see. First one. Guys, it is a new clarification which is added. So please be careful. I have mentioned it in italics. Clarification on availability of ITC in respect of goods delivered under X works contracts. Sir, what is this X works contract? I will explain. Circular number 241 bar 35 bar 2024 GST dated 31st December 2024. Sir, what is it? Guys, I will just give an example. Please listen. So let us try to understand with an example. Yeah. X works contract means, see, assume this is the factory gate of the supplier. This is the factory gate of the supplier. Is sending the goods to the recipient. Now, if it is a X works contract, once the supplier handed over the goods to the transporter. Now, who is sending the goods? Supplier. Through what? Transporter. Now, at the factory gate of supplier, if he handed over the goods to the transporter, not to the recipient. Recipient has not come to the supplier place. He is sending the goods to recipient's place. Through whom? Through transporter. Sir, when the supply is said to be completed? When the supply is said to be completed? Is it when supplier handed over the goods to the transporter or when it is delivered to the recipient? If it is a X works contract, guys, supplier responsibility is done once it is handed over to the transporter. Supplier work is done. Means all the risk and rewards now belongs to whom? Recipient. Even though he has not yet physically received it. Sir, once supplier handed over the goods to the transporter, now transporter will go and deliver it to the recipient. So supplier's responsibility will end when it is handed over to the transporter, not to the recipient, to the transporter for the goods to be delivered to the recipient. So can I tell supply is completed at the factory gate of supplier when he has handed over the goods to the transporter? Yes, supply is completed. Now the question is, sir, recipient is eligible to claim credit when? When the goods are handed over by the supplier to the transporter or when he has physically received the goods. For example, let me put two different dates. Guys, assume the date on which supplier gave it to the transporter is 10th January 26. But these goods are received by the recipient. Recipient received these goods on, assume 14th February 2026 when recipient received it. Now the question is, as per section 16, when the recipient is eligible to claim credit, is it in February or is it in January, guys? What is your answer? January. Sir, physically still the goods is not received by the recipient, no sir? No problem. Section 16 told one of the condition. Goods has to be received by recipient. Yes. But here, even though it is not received by the recipient, from supplier point of view, supply is completed. Now, once the supplier handed over the goods to the transporter, all the risk and rewards now belongs to whom? Recipient. So, if by chance, if goods is lost during the transportation, who has to bear this loss? Recipient. So, this clarification told, even though section 16 told the goods has to be received by the recipient in order to claim credit, it is deemed that when goods are given by the supplier to the transporter, it is deemed that it is delivered to recipient. It is deemed that it is delivered to recipient. So that means recipient is eligible to claim ITC as on what date, guys? 10th January 2026 and not on 14th February 2026. Literally, goods is physically received by recipient on 14th February. Clear? Sir, how long will it take, sir, from 10th January to 14th February? I have just given random example. Assume goods are coming from different states on truck, takku, it is coming. So it will take number of days. Clear? Yes. See, if it is on the same month, for example, assume it is handed over to the transporter on 10th January and it is received by the recipient on 14th January. Sir, credit is in the same month. We need not worry about the date. Clear? So why I took two different months is intentionally. Because can I claim the credit in Jan month return or Feb month return? Jan month return. That is, the recipient can claim credit, that is input tax credit, in GST or 3B of January, which you will file in February. Hope you guys understood. This is called X works contractors. Clear? Yes. Chalo. The clarification is with respect to that. Let us read it. In an automobile sector, the contract between the automobile dealers and the original equipment manufacturers, that is OEM, is generally an ex works contract. And as per the terms of the contract, the property in goods, that is vehicles, passes on to the dealer. Dealer here means recipient, guys. At the factory gate of whom? Supplier. Who is supplier here, guys? The original equipment manufacturer. In short, they have given it as OEM. He is a supplier. When the goods are handed over to whom? Not to the recipient. When the goods are handed over to the transporter, at the instance of the dealer, and the delivery on the part of OEM is complete. Where? Not at the recipient's place, at the supplier's place only, at his factory gate. When, sir? When he has handed over the goods to the transporter. And this transporter might be a third party, or he might belongs to supplier only, or he might belongs to recipient. We don't care about it. Sir, in case of X works contract, the supplier, once he gave the goods to the transporter, or simple, once it is loaded into the vehicle, his game is over. His game is over. That means along with the goods, risk and rewards with respect to the goods is transferred to whom? To the recipient. The transport may be arranged by OEM, that is supplier himself, on behalf of the dealer, or where insurance is arranged, it may also be done on behalf of the dealer. Any claim in case of loss has to be lodged by whom? Dealer. Guys, assume transportation is arranged by supplier only for delivering the goods to recipient. Still, when the supply is completed, at the factory gate of supplier. And also, assume during the transit, insurance policy is taken. If anything goes wrong, who is responsible for it? The recipient. So if anyone has to claim the policy, is it supplier or recipient? Recipient. He will file the complaint, or he will lodge the complaint with insurance company. Who? Recipient. The issue which arose for consideration was whether ITC can be availed by the dealer only after the vehicles are physically received by the automobile dealers at his business premises, or ITC can be availed on the date of vehicles are billed to him and handed over to the transporter by the OEM, which is supplier, at his factory gate. So there are two different dates on what day credit is available, sir. It has been clarified through circular that in such a scenario, the property in the said goods can be considered to have been passed on to the dealer by the OEM upon handing over the said goods to the transporter at his factory gate, meaning thereby that the goods can be considered to have been delivered to the registered person, that is the dealer, who is the recipient, through the transporter by the supplier at his factory gate, and the supply of the said goods can be considered to have been fructified, means completed, at the factory gate of whom? OEM, who is the supplier. Even though the goods may be physically received by the registered person, the dealer, after the transit period. In simple, guys, supply is completed from supplier's point of view when he has handed over the goods to the transporter. That's all. So even from recipient point of view, is purchases completed? Yes. Accordingly, it is clarified that as per the explanation to section 16(2)(b), the registered person, that is the dealer, can be considered to have received the said goods at the time of such handing over of the goods by the supplier to the transporter at his factory gate for their onward transmission to the said registered person, that is the dealer. The same principle is applicable in respect of supply of any other goods. We just took an example of automobile industry. Is it applicable only for automobile industry or any industry? Any industry, wherever it is, X works contract. The same principle is applicable in respect of supply of other goods also, where the contract between the supplier and recipient is a X works contract. And as per the terms of the contract, the goods are to be delivered by the supplier to the recipient or to any other person, that is including the transporter, on behalf of the recipient at its, that is supplier's place of business, and the property in the goods stands transferred to the recipient at the time of such handing over. In such cases, the said goods can be construed to have been received by the said recipient at the time of handing over the said goods to the recipient or the transporter, as the case may be, as per the provisions of section 16(2)(b). Guys, as per section 16(2)(b), what is the condition? goods or services should have been received by the recipient. So, as per this circular, when it is deemed to be received by the recipient, is it on 10th January or 14th February? As per my example, 10th January. It is also mentioned that as per the provisions of section 16 subsection 1, a registered person is entitled to ITC only in respect of supply of goods and services which is used or intended to be used in the course or furtherance of business. Sir, what if by chance if this goods is used by recipient for personal purpose? Can he claim credit? No, 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 no. Only if he is intending to use it for business purpose, he can claim the credit, guys. Thus, if the goods are found to have been diverted for non-business purpose at any stage, in simple, if it is used for personal purpose, either before physically receiving the said goods at his business premises or subsequently, the registered person shall not be entitled to ITC on such goods in terms of section 16.1, because 16.1 clearly told it should be used or intended to be used for business purpose. Now, for example, sir, supplier loaded the goods into the vehicle. Now, vehicle went and unloaded the goods in the residence of the recipient, where the goods will be used for personal use or personal consumption. Will credit be available for the recipient, guys? No. Credit will not be available. Only if it is used for business purpose, credit can be claimed by the recipient. Further, if at any time after receiving the goods, such goods are lost, stolen, destroyed, written off, or disposed of by way of gift or free samples, the registered person would not be entitled to ITC in respect of such goods as per the provisions of section 17 subsection 5 clause H, guys. We have not yet covered this. We will be seeing it later. In simple, recipient was about to supply the goods, but before he make outward supply, he lost it. He lost it. Can he claim the credit on this? No, he cannot claim the credit. Understood it? There is a connection for this even for schedule 1. We will learn that when we are learning section 17.5, guys. So in simple, before even supplying these goods or before even using these goods, if it is lost, can recipient claim the credit? No. Or else just imagine, sir, once the goods are handed over to the transporter, supply is completed from supplier point of view, right? Yes. Even before it is delivered to the recipient, on the road, in transit only, goods are lost. Goods are lost. Maybe, sir, vehicle met with an accident. Now all the goods are damaged. Can recipient claim the credit, guys? No. When he cannot use it or when he cannot make an outward supply of such goods, no credit, guys. No credit. Yes, sir. Next clarification. Clarification on the time limit under section 16.4 of CGST Act 2017 in respect of RCM supplies received from unregistered person. Guys, what they're telling is, if supplier is unregistered, okay, let me take it as unregistered, whereas recipient is registered and RCM is applicable. Recipient himself has to pay tax. Yes, he has to issue one document to the supplier. What is it? Payment voucher. And he has to issue one document for himself, which is that invoice. Actually, self-invoicing. Clear? And what is the due date to issue this self-invoicing for recipient himself? 30 days. 30 days from the receiving goods or services. Is that clear? Yes. So in section 16, subsection 4, they told recipient can maximum claim the credit within what time? 30th November of next financial year or actual date of filing annual return, whichever is earlier. Now, what happens? No, listen. Very beautifully framed. This recipient, in order to claim credit later, assume he issued invoice for himself later. Actually, supply happened, assume on 10th July 24. Okay, let me take 25. 10th July 25. Within 30 days from 10th July, he has to issue invoice for himself, right? Yes, I repeat. He received goods or services on 10th July. Within 30 days from here, he has to issue invoice for himself. But assume he issued invoice for himself on 1st May 26 next year. So invoice date will fall in which year, guys? 26, 27. So he will have time to claim credit till when? till 30th November 27 or the actual date of filing annual return for 26-27. Assume the actual date of filing annual return for 26-27 is 15th December 27, guys. Whichever is earlier, 30th November. Means as there is a benefit of giving invoice for yourself, you might extend the time. So they told recipient, I asked you to issue invoice within 30 days, right? If you don't issue invoice for yourself within 30 days, no doubt you will get the benefit under section 16(4) of extended time, but I will penalize you. Why? For issuing the invoice later. For issuing the invoice later. Hope you guys understood. Yes. That means if there is a delay of issuing the invoice beyond 30 days, from 31st day, will recipient be penalized for the delay in issuing the invoice? Yes. Means they are just telling, just because you will get more time, don't delay issuing invoice for yourself. Sir, anyway, for me only, no, sir. I will issue next year, sir. Next to next year, sir. My birthday is there next year. I will issue on that day, sir. No, you can do it. Okay, if you want, you can do it. Nothing wrong, but be ready for penalty. Clarification on the time limit under section 16(4) of CGST Act 2017 in respect of RCM supplies received from unregistered person. Means who is that unregistered person? Supplier. Circular number 211 bar 5 bar 2024 bar or slash you can call it as GST dated 26th June 2024. And I had already told, sir, is the circular number date and all is important, guys? No, not important from exam point of view. But the content of circular is important. It is clarified that in cases of supplies received from unregistered suppliers, where the tax has to be paid by the recipient and reverse charge, and where invoice is to be issued by the recipient of the supplies in accordance with section 31 subsection 3, which talks about self-invoicing. We have not yet covered actually. Section 31 subsection 3, we have not yet covered. That will come later. Of CGST Act 2017. The relevant financial year for the calculation of time limit for availment of input tax credit under the provisions of section 16(4) of the CGST Act 2017 will be the financial year in which the invoice has been issued by the recipient under section 31 subsection 3 of CGST Act, subject to the payment of tax on the said supply by the recipient and fulfillment of other conditions and restrictions of section 16 and 17. Guys, just because there is a liberty given to the recipient to invoice himself, that is self-invoicing, there also they told you have to issue within 30 days. But he thought anyway for me only, no, I will issue next year. So he is extending the deadline given under section 16(4). But for this, should he pay interest, late fee, penalty and all? Yes. And actually, if he delay issuing invoice for himself, there can be a chance that there is a delay in payment of GST also. And when there is a delay in payment of GST, will it attract interest for that? Yes. It will attract interest for that also. Why, sir? Simple, guys. For the inward supply which is taken in July 2025, maximum the tax has to be paid on or before 20th of August. So by then you have to issue self-invoice and pay GST. But if there is a delay for doing self-invoicing and assume there is a delay in for payment of GST also, lot of things will come to you. What is it? First thing, you have to pay GST along with interest for the delay. Plus, you have also delayed issuing invoice for which there will be a penalty. Okay. What is it? In case the recipient issues the invoice after the time of supply and the said supply and pays tax accordingly, he will be required to pay interest on such delayed payment of tax. So if there is a delay in payment of tax due to delay in issuing the invoice, you need to pay tax along with interest. Further, in cases of such delayed issuance of invoice by the recipient, he may also be liable to penal action under the provisions of section 122 of CGST Act. But section 122 is not a part of your syllabus. But for delay in issuing the invoice, will penalty be charged to this person? Yes, guys. Penalty would be charged. And guys, actually easy to remember the sections. Section 16, subsection 1. First main thing we need to check is what? Recipient. First thing you will check is what? Whether recipient is registered and is goods or services used for business purpose. Subsection 1. Subsection 2 has lot of condition, 2 or more conditions. So subsection 2, 2 or more condition, too many conditions. Subsection 2. Subsection 3, section 16, subsection 3 talks about what? GST on capital goods. Capital goods, Dinesh, starts with C. C is a third alphabet. So GST on capital goods is covered in section 16, subsection 3. And also it has a connection to section 43, subsection 1 of Income Tax Act. Easy to remember. Next, section 16.4 talks about what? Deadline. Deadline to claim credit. Deadline starts with D. D is the fourth alphabet. D is the fourth alphabet. Fifth, subsection 5 is not relevant. Subsection 6 we have not yet covered, guys. Is that clear? Yes, sir. Whatever clarification we discussed, I will just connect to the example which we had already discussed, guys. This we had already discussed when we were talking about the time of supply. Yes. What is it? We will see. When we were discussing section 13, subsection 3, where the services is taxable under RCM, we spoke about this, guys. Both this example. But the clarification is straight away on this. Let me get into it. Sir, what is it? If the supplier is unregistered, supplied goods or services which is taxable under RCM. So in that case, will supplier issue any invoice? No, guys. As he is not registered, he will not give any document. So what should recipient do? As RCM is applicable, he has to pay tax himself. Issue payment voucher telling I have paid so much to you. So proof is this. He will issue payment voucher to whom? Unregistered supplier. And he has to issue invoice for himself. And what is the due date to issue invoice for himself, guys? Within 30 days of receiving the goods or services. And once he issue invoice for himself, then what is the deadline to claim credit? We need to follow which section? 16 subsection 4. We need to see what is the invoice date. And that invoice date will fall in which financial year? And what would be the deadline? 30th November of next financial year or actual date of filing annual return for the year in which invoice is issued. Whichever is earlier, guys. Is that clear? Connected to whatever time of supply we already discussed. Actually, about this self-invoice, where is it given is in section 31, subsection 3, which we will cover it in invoice chapter, guys. So this is all about the clarifications on section 16, few transactions.